12th, 2023. We're going to be streaming stocks, options, futures. Looking at some technical analysis. Looking at the SPY, barbecue, GME, whatever's ripping. Let me get set up here. Get a little Yaz going for you. Morning Tree, morning SHF. Pretty flat on barber coating this morning so far. I'll probably be dip buying today or breakout buying. I feel like it'll probably be flat to dip buying, if anything. Not a full amount, but some just to have exposure for news over the weekend. Barbecue. Happy Money Friday. What's up, Passing Clouds? What's up, Buzzing? I am sick. So might not be chatting as much. Feel maybe a little better than I did yesterday. Straight Elon Musk voice. Oh, you're talking about fun? See. At earnings? Not a very good reaction from positive earnings. Not sure what you're talking about playing to 823. Bouncing off that port line, pretty nice though. In a downtrend. Barbecue sites can open up pretty flat. Some levels in here. Oh, pre-market high. That level it keeps testing. 414 or so. Get that in the pre-market. Might have been a good short there. Big ranges these days. Kind of still chopping around in this range on the SPY for which way it wants to break out. Got this inverted head and shoulder still, this island bottom. Now it's holding up this higher level. So slightly bullish maybe, but it really just hasn't decided which way. Morning, Dennis. Morning, Fire Marshal Bill. Get Around's up 94%. We've looked at this before. Do they have earnings? This car sharing. Get Around to buy hire car for $9.5 million. Aggressive purchase price. So here's a case where the acquirer is rallying on the news. I suppose because they got a really good deal on it. Oh, Hire's traded also in OTC. The companies are starting to consolidate. Morning, Mo. Hey, Lords. Why are you sad? Be sad. Get glad. The video posts when it runs. We might not be about to sell off. I mean, market's pretty undecided. Oh, you're just talking about scalping them, day trading them. We'll see. I mean, we had a rally this morning, pre-market, to that resistance, that tested resistance over and over. So, not sure if we go where we go from here. Come up, back up, probably just retest around this level. If we break, yeah, then we've got upside 420. And beyond. Lunar? Maybe. Fridays they like to run it also. Careful by end of day. Today they like to go up. Here's on Lunar. Earnings. First Solar's up 13%. What the heck? I was trying to get puts on this thing. They have earnings? Oh, they acquired someone. Look at that. Another company that's acquiring. First Solar snaps up Evilar for 80 million. Another company that's actually bullish on the news that they're taking another company, buying another company. That's interesting. Well, maybe it's not so bearish. Probably depends on the terms. How favorable they are. First Solar's ripping. Maybe my puts on First Solar will fill. Alright, market is open. SPY is opening up 0.3%. Barbecue 0.9. Still have our channel here. We've been trading in 20 cents on the upside and like around 18 cents on the downside. AP with a pretty good balance, up 5%. Tarian. GME flat. Yeah, fill today on barbecue would be very neat. Eyes coming down a little bit. Pretty mellow. Pretty mellow day, I predict, like yesterday. But you never know. Could have some runs. Maybe barbecue will run today. That's been consolidating now for like 3 days. Up 2.5%, 1945. Okay. Pull up the all right, there's barbecue, 20 cents. This is the one of the levels I want to break. See some upside. Go long. But really, I mean, we've got, oh, there you go. 20, 30, 7%. I'm being patient though. I'm not going to jump into this. All right. It's up. It's up, but I think it's just a little morning liquidity push. He's getting excited. No, I don't have a position on it. I sold out when it rejected that resistance. Been looking to get back in, and I'll probably get some exposure today. Just to have exposure for over the weekend in case there is news and just gaps up, or there's news and it gets suspended and then it resumes gapped up. I think these are possibilities. Happy Friday. Our solar 17%. SPY's coming down a little bit here. Trying to be patient on my trades today. I was all amped up from my after hours trade and way over traded yesterday. Cosmo Kramer up 6%. Sunrun up 5.5%. Weird stuff on my list up this morning. Oh, kitty. Yeah. Barbecue 1926 plus 1.4%. FAI. I'm keeping Bed Bath on my E-Trade, my other monitor. So if I'm not looking at it, keep an eye on it. Weeble sometimes lags too. It's not the best. FAI 8.2. They had a share offering, I think, right? But sold this thing off initially. Yeah. But it's not at a bad level. I don't know anything about this company. Probably trash. Barbecue 1949, 2.63%. Just rejected that 20-cent breakout. Really needed to come up above here and then come down and retest that as support. Flip it from resistance to support. Overtrading's fun. Whee! Yeah, Silvergate, man. Still suspended, right? Oh, Tesla's up. Whoa, Tesla's up 2.5? Oh, I bet that's from that Twitter news. Yep. Twitter news lining up nicely with the little Tesla gap fill. I mean, the chart looked bullish, but I was so uncertain about SPY, I didn't want to go long on Tesla plays. Barbecue's at 1930. General Motors, I think, is more volatile than GME at these days. Oh, SI, is it delisted already, huh? This? Yeah, SICP. Yep, that was fast. Oh, peace out. Peace out. think Sunrun is just rallying on the news from First Solar. Just sympathy rally. PFLI. Silver is up 5%. ExoCorp advances arrangement agreement with Tilray. Yeah, SI is done. Been delisted. No Elon is bullish. No Elon deviating his focus from Tesla to Twitter is bullish for Tesla. Oh, yeah. Moving up. Life. FIE up 18%. Making its move up. Barbecue 1964. Yellen says most U.S. banks would be able to pay off uninsured depositors. That looks pretty nice. I should be rejecting that now. Be new resistance. Ed Bowman, was he speaking today? 1965 on barbecue. He says, should inflation remain high and the labor market remain tight, additional monetary policy tightening will likely be appropriate. Yeah, Silvergate basically said we're going to stop. We're going to stop submitting our reports to the SEC and their filings that be listed, and we're firing everybody. So I don't even think they're necessarily going into Chapter 11. I think it's just Chapter 7. They're just done. I'm not sure though. I'm moving up a little bit. Tempted for that long. Waiting on it. Waiting on an obvious setup. Hey, Trace. Morning, Mosimus. Wine is flat. Barbecue holding up, 1970. AP 5%, has a gap there now. W down another 3%. Barbecue 1970. Recap GGG. SPY coming down here. An engulfing candle, see if it's play out. A big drop there on SPY now, filling that gap. Look for a bounce. Well, if it barber explodes, barbacodes. Oh, if it barbacodes today, next week should be bullish. I'm not sure. It's the lack of movement the last 3 days, or 2 days, I guess. Oh, 3 days. Maybe this is the fair price. Oh, there's a news catalyst. I don't know. I'd like to think it'll keep rallying without anything, but pretty content in this range. Fill that gap all in one 5-minute candle. Yeah, I'm not gonna chase it. SPY's coming down. Retest up there was a nice short. The big old red candle on SPY. Hey, X-Ray. Don't you put that evil on me, Ricky Bobby. I don't have like a specific target price I'm trying to get on it. Seeing how today plays out. If it breaks the upside, I'll just grab it on the breakout. Breaking of this, not quite the level. I'd like it to break this, so yeah, if it breaks here and then retest and shows support, then yeah, I'll probably pick it up there. Comes down and breaks through here. I'll look for some whatever the low of the day as best I can. But yeah, that's not me buying in right here, right? Because unless if this breaks out,
I heard Mom.
Unless this breaks out, I'm gonna wait because I'm assuming it's gonna come back down and retest the 18 area. There's the bounce on SPY. You get the engulfing candle though, so I think I will go short. If it makes it back to VWAP. Volume has been plummeting every day. Yeah. Drunk, I went to a drum and bass concert last night. Nice. 1:30. I made it all the way back to VWAP. Was it outside? See? Some people have perspective. X-ray sees a positive 100% in 3 days. That's right. Been flat for a few days, so excitement's died down, but Still a big bounce out of that low. If you don't even count the delisting low, just even from here, what, 10 cents? Bounce up. I made it back to VWAP. A little early on my short. I think I'll let it ride. There's some after-hour trading on OTC. I think it's like 1 after-hour market closes, I believe. Look it up. But I think most retail is not able to trade it after hours. So not sure. I've gotten conflicting information on it. I've seen it has less after hours times than normal stocks. 6 a.m. to 5 p.m. Maybe that's what it is. So an hour after the market closes and then a few hours before. But again, I don't think any individuals are able to trade it in after hours. Exercise them, passing cloud. Do it. At 10 cents. Nice. Yeah, you should be good at 10 cents. I think either that's going to go to 0 or we're not going to see 10 cents again. If that makes any sense. I think the lowest we'll go if we're going to continue to rally is 14 cents on this gap fill. Look at that bounce on SPY. Holy. What about pre-market? It does. You're just not able to. It still trades in extended hours. That's what we're watching in the morning. We're watching the German market even. Because brokers don't even show it. Margin all in already. Alright. Well, that ain't bad, Cloud. Like 20 dead today. Yeah, I mean, I didn't really know what it'd be like on OTC with the options. Didn't realize you wouldn't be able to buy any. Probably would have bought some before OTC if I'd known. I probably would have got like a year of time though. And at that point maybe it wouldn't have mattered, I don't know. $5 now, no news? I have no idea what you're talking about, Lords. Nasdaq Manipulation Center, OTC is better for traders. Yeah. Yeah, it seems like OTC is more raw, more natural price discovery. No high frequency trading, I don't think. No payment for order flow. All these little tricks that they've developed and implemented on Nasdaq and New York Stock Exchange, where retail mostly trades. They can skim and cheat their way. Front run you. Barbecue 1912.68% positive. So coming back down a little bit. Below VWAP. Yeah, shares were the plays when the IV was so high. I would have gotten it before OTC if just to have the little bit of leverage in case it does go crazy. And I guess not knowing that I wasn't able to have it, I would have liked it. Is that pre-market? Yeah, it's like a different market. I think extended hours actually on exchanges are less manipulated. Pretty sure it's like a totally different market that takes over for extended hours. And I've seen that when retail buys in extended hours, it actually goes to the lit exchange. Basically, all the other exchanges are better from what I've seen. Uber will soon allow its UK customers to book plane tickets directly through its app. That is an interesting development. We're reacting on that. A little bit. That earnings rip. Below VWAP, got that engulfing candle in the 5 minute. I took a short on the bounce. We'll see. I think I'll still fill this gap. And whoa, data 10 o'clock. What just came out? I did not realize data was coming out at 10. Oh, consumer sentiment preliminary. University of Michigan preliminary May sentiment estimated 63. Was it? Came in at 63.5. Okay. Basically it met expectations. I get into this gap fill. Considering closing my contract soon. A lot of chop down here if it wants to keep dropping. Alright, gap is filled on SPY. Almost gone from green to red. Contracts are up pretty good. Have filled, time to rip, or consolidate and some more drop. Big bounce off that gap fill. He's setting up kind of a cup and handle here. Or bounce here and maybe go. Or maybe right where it bounced, honestly. Yeah, I'm gonna close out of that. Liked it, but I'll just wait. Closing right at the gap fill would have been smart. NBC Universal announces departure of ad chief Linda Yaccarino, reported to be in talks to become the next Twitter CEO. Oh yeah, is that the one? It's coming over from NBC? Wow. Yeah. Join the Discord. Let's talk about anything economic, sure. Eyes coming down a little more here. I don't know why I was so jumpy to take profits, but maybe a good thing. Yeah, there's more of the move. Green to red on SPY. IDEX. Started looking at that cup and handle and just got nervous. There's a green candle right on that line. Oh, that's the high from over here, low from there. Yeah, that's more of a support. You trust my supports. Yeah, maybe IDEX. Not looking as good though. Got a couple candles under the 9 moving average now. But yeah, you're right. It is at that 4 cents. Maybe it'll find support. I come down a little more here. And I saw the move. I saw the engulfing. It held longer. Oh well, now we've got right under the 9, bearish MACD. Got him. It bounces on that 50.
The ego on you.
Oh, what do you got him? Ow life. Thank you, Fire Marshal Bill, for your gifted membership. Ow life. Fully sniped by Ace. Ow, report to chat. You only have to lurk once a month when you get sniped out of thin air. Thank you, Ace. I appreciate it, man. Very generous. Thank you guys for your likes as well. We're 21 likes today on this fine Friday for a barbecue. Barbecuing. A recession will unfold this summer and last through the middle of 2024, says Evercore chairman. Russia's central bank has 8.3 billion being held across Switzerland that have been mobilized. Huh. Hype. BAOS up 8.7. That's still a nice looking chart there. One of the Chinese ones, isn't it? Yeah. Holding a nice little kind of pennant flag thing. XRT. How's that one doing? 2%. Very good looking chart. Nice and smooth. I like that. And they just had earnings. That's out of the way. I might get me some of this one. Looking for resistance. Got a little room to the upside still. Maybe. 120. Get a run. Maybe look for a dip back to the 50 moving average. The SPY's bouncing off that support. Yeah, I like this chart tree. Nice. Looking for a nice entry on that. We have an RSI divergence here too. Not a huge one, but SPY is now kind of bear flagging down here. I might jump back into some shorts. I think this is higher, yeah. Building a little head and shoulders with yesterday. $18.30 on barbecue. End phase is up 5. Do they have earnings? Oh, got a gap to fill there. SPY's moving up. First Solar still going. $19.44 on barbecue, just under VWAP. AP holding its gains, 5.8%. Top is halted. Happened this morning on top. Yikes. Back to reality for it. See you in a few months. Oh. There's a red day on Carvana. About time. I should go cash secured puts on this, but I want a little bit more of a pullback. I don't know. It might be a good day for it. Nvidia? Nvidia. Hanging on. MACD's flipping bearish today, maybe. Still has all the indicators. I mean, we'll know when Nvidia's selling off. SPY's going to be also. It's going to be a pretty noticeable event, I would imagine. It has any sort of velocity to its sell-off. Mullen's down 7. Ah, Mullen, the barcoder. Ava. Had a nice little rally. He's Wayfair down 5.8 again. Fully gonna fill this gap. Hi, Lords. Some X filling the gap. Thanks, Tal. Appreciate it, man. I know you're loyal. You're a loyal listener. Has a gravestone. I like those. Hi, bear flag in? Maybe. Is on that support though. Let's see. Caribbean's down 5%. Barbacoating again, yep. Hoping for some excitement today, even to the downside. Maybe by end of day. Give us a nice little short into close. Fisker's down 4 1/4. Double top on there. Oh, SPY might want to bounce here on that support. like a little bear flag, but hard to justify when it's on support like that. Is golf IPO? Like, what would it be? Start coming down, filling this gap. One stock for 20, then boom, we sponsor players for advertising. Advertising come. Fully becoming code. GME down 1%. Yeah, top is halted this morning. Morning, it's me. Why is buyout taking so long? Whoa, there's your flush on barbecue. Holy smokes. Yay, it's exciting again. Make barbecue exciting. So, broke through those supports. Okay. Spy still flagging. Barbecue hit 1712 there, so yeah, that's kind of the breakout level, the downside I wanted to see. So we might get the gap fill. I get it. Down 8%. I haven't scooped up more. Low on the day, yeah. I mean, maybe this is it, but we should know. It's pretty early to be calling that already. It's only 10:30. It's a Friday. They like to drop it on a Friday. I mean, this isn't uncommon. Although SPY, mega caps, they like to rally on Friday. Fifth month, slow bleed to 5. Getting these bottom wicks on the SPY, but still waiting on that bear flag and this little head and shoulders. Exclude extended hours. Barbecue 1780, down 6.25%. Everything's killing me. I'm going discount. All right, man. Have fun. GME down 1%. AMC's had quite the little top there the last few days. Two and a half. Okay, SPY coming down here a little bit. There it is. Figure out where we find support on this thing. Not a whole lot really until like 409. I guess 4010. That level's still there. Oh, that's 4010. 410, yeah. There you go, SPY. Let it out, man. Let it out. SPY moving down. European Union plans to force crypto companies to give tax authorities details of their clients' holdings, according to a draft bill released to CoinDesk under Freedom of Information laws. Barbecue bouncing back up a little bit. 1790 I have for support resistance. Flush through there. I'll see if it uses this as resistance. Or that 1832. Bouncing a little bit. I could have sold on that first initial gap fill and just jumped out for the scalp because SPY moves, market moves quick in the morning. And then waited and then got back in, which is kind of what I did, but I waited too long on that first sell. Gap filled and started bouncing and I was hesitant. So I got an exit like here instead of like down here. And then I re-entered, which was the right choice so far because we got the bear flag and now it's coming down. Could have held through all of it, but you never know. Like, you might get that gap fill, and then we have something like this happen. So taking profits when it's volatile and letting it settle down to see which way it wants to go. Because after it started settling and consolidating here, I thought bear flag. Barbecue coming down, so did use that 1790 as resistance. The flush through it was support. Bounce back up, now it's resistance, and now we're doing a downtrend probably. Not a whole lot of levels until it's gap fill, really. Kind of just hanging out here. Osmos is talking about this gap down here, Lords. Gap we've been waiting to fill is 14 cent gap. Put a stop loss on my current contracts. Don't think it'll get up there, but if it does, it's maybe done dropping, so I think we're getting close. Pretty good bounce there. Did you not see that gap? I've literally been talking about it since we made it, like a week ago. Seven hours a day, 5 days a week. Lords, that gap has been there, being discussed. Top is still halted. Never gonna resume? Yeah, silver get down 67%. Being delisted. Up happened so fast. First solar still on the high. I know there's not many stocks very green on my watch list when Birds is up here. We got some IDX. Going for the little dip buy. That just flushed through that support. Tax what? Supply still melting down. Tesla, green to red. Wow, look at that flip. Nvidia down 1%. Okay, starting to get a bit of a sell-off. Microsoft down 1. Okay. Apple down half. It was flat. There you go, SPY. Hopefully pulls up next week. Maybe. We've maybe found an equilibrium. But yeah, I don't know. Have to see where the momentum starts to go back up. If the squeeze or kill this thing. Gonna have to have a catalyst for a squeeze. There's a new low on barbecue. On 11%, 1687. Don't deal with the apes on Reddit then, AC. Or deal with them and just short whatever they're long. Patience. Pretty big bounce there on the SPY. Maybe this is the handle. More fleshy. Gap's getting filled here on barbecue. We're getting close to it. 1660, it's down 12.6%. Hey, caps. Best case scenario. Yeah, I don't think we're going to bounce up that high. But maybe. Big bounce on the SPY. Red to green. Is this a cup and handle now? Is that what we're doing? Yeah, gap fill today, and then we'll see next week if we start to rally again. Still plan to get exposure today for some weekend news. Maybe it'll be at 14. I don't know. Yeah, it's 14. Right around there. 14.10. Still haven't even started filling it though. The open of that day was 16.13. 16.62. So it's gonna be a big down day if it fills that gap. That's like 20-something%. Okay, I'm out of my coin play. A little nervous with this thing. It was a theta farm. Anyways. 16.30, new lows there on barbecue, down 14%. A little further, and the gap's starting to get filled. $16.11, $16.10, down 15%. Yeah, now we're in the gap fill territory. So this is just lower than where we opened on the 8th. And this is why I wanted to short it. Because it's 14%. You make money on it either way. Or GME is again flushed also. Yeah. If I got out of those calls on GME, it's just so weak. I mean, given this could still turn around, but even though the chart looked bullish, it's like it was just way too reliant on SPY. It showed some life those last whatever few days in here, where it was doing something different, but last like day or two it was like SPY's little pet. Might close my shorts here on the SPY actually. So oh no. Just this hammer candles push out of the low. Barbecue bounced up there. But shorts are evil. Wharton professor Jeremy Siegel says stocks could jump 15% this year as long as the Fed cuts rates quickly. Please, Papa Pal. Please cut rates quickly. I'm cutting. Take my profits here, see what happens. Would have been a nice one down here, but I didn't see that as any kind of support, so I think I need to close there. Big bounce out of there, scary. Could be just bear flagging again. Literally, it's just the same thing happening, just stair stepping. Eyes red. 10. And spy's coming down again. Barbecue 16, 22, 14 and a half. Looks like it's about to make new lows. That's one of your fibs, eh? Yeah, pack W. I know, I still can't get out of my puts. Guess they do expire today. They are way out of the money. I was too hasty getting out of that bear flagging. Fill us a gap. Troika's up today. 4.5. Nothing on that stock. Trading View is 15 minutes behind. Let me get back on the shorts here, jeez. Had to do it. Bank of America's Michael Hartnett says it's not yet time to buy equities as outflows accelerate amid elevated inflation and recession fears. Barbecue hanging down here, 1640, down 13.7, 14%. Just getting into that gap fill territory. I mean, it could find support here before the gap fill, but yeah. Maybe. Maybe this is today's low, and then gap fill maybe next week. It's down 13% here. Highs coming down a little bit. Yeah, we got the import prices. U.S. April import prices plus 0.4%. Consensus was plus 0.3%. Non-petroleum import prices was negative 0.1%. U.S. petroleum import prices was plus 5.7%. No bad news. Nope, not that I've seen. Just typical Friday sell-off. Just like there was no good news to cause this rally. a stop loss on my shorts right here. I got stopped out there. Am I buying shares? Probably. Seems like we're filling. Not sure if it'll be today or next week. Some today, some next week. $4.20 on SPY. I mean, we broke to the upside, yeah, but it's not. The CPI and the numbers weren't bullish enough. Doesn't seem like, at least the market's, that's the way the market's taking it. So maybe not. But again, we're waiting for the direction. The market's totally undecided, really. I mean, 400 is still kind of in the range, even just above 400. You know, 405, like these daily candles. So 420 would be the breakout. You know, that'd be above a new high. 400, yeah, I guess 400 would be a breakout too. But if we hit 400, I think we'll probably, you know, probably keep coming down. Similarly, if we hit 420, we have a little more room to go up, maybe even 425. Well, we'll see. It's making an engulfing candle here on the daily. Not sure if that'll stick by end of day. Being that's a Friday, but a lot of bad bank stuff going on. You know, Silvergate, they just went under yesterday. You're gonna add it 1410? Ace Ventura with the ad. Yeah, I mean, I'd like to see. Could just gap fill and then just rip, but not necessarily. Very well could gap fill and consolidate and bounce around before it builds momentum to get upside. SPY's kind of ripping there. Might take the long even. Too soon. Soon for the bounce. Build a little first head and shoulders or something here. We have an RSI divergence with that candle, but it's just the wick. The same way it came up here and ripped and was all fast and fun and hit resistance and then slowed way down. So coming down, it might be maybe not fun, but it might be kind of fast the next couple days. And then everyone's so eager to buy, but it might just slow down before it comes back up. Eyes moving up a little bit here. iShares MSCI Turkey ETF down 6.7% pre-market ahead of Sunday's presidential election. EU securities watchdog ESMA says it has found liquidity and concentration risks in Europe's natural gas derivatives market. What is UNG doing? They'll just chop it around here at the lows. Oh, GME had a big bounce out of that low. Like maybe another bear flag. I don't know. This kind of head and shoulders. That kind of played out by now, I think. Yeah, I'll just chill. Tech workers are reportedly freaking out over whether the end is here for 500,000 plus salaries, given the rise of AI.
Tesla and some of the Tesla specific issues.
The
whole idea. I mean, of course, everybody respects, and that's what people look to him for, particularly for Tesla. And he made it a point in his last investor day meeting or some meeting where he was trying to show all the important people at Tesla that he's not the only one there, but people were worried. So what are we looking at prices here these days as we look at the charts of Tesla and maybe some positive comments too?
So I would say this is, was initially perceived as a positive. No doubt the fact that they are raising some of their prices yet again. Initially, we saw shares spike, as you can see from the intraday chart here, but now shares pretty much unchanged on the session. The prices covered all of the vehicles with the exception of the Model 3 and ran as high as about $1,000. However, the base prices for the Model Y, S, and X are still notably below where they once were at the beginning of 2023. So he did raise the price of the base level Model S by about $1,000 to just over $88,000 when they last made adjustments back in April. Similarly, the price of the Model X is going up by about $1,000, and they're also bumping up the price of the Model Y only by about $250. The base level model now lists for around $47,000, while it started back just slightly below or around $47,000 when Tesla did make those adjustments earlier even this month. The company has kept the Model 3 sedan's price unchanged at around $40,000. The latest changes, though, are among a series of prices we've seen that Tesla has been making throughout the year, and the recent pricing moves are seen as a way to help with some of the margin expectations for second quarter. Also, we're seeing as a way to lift some of this investor sentiment. Like we've said, like you said, Nicole, Elon Musk, I think, is really trying to shape the vision and the perception of Tesla. He did defend this year's price reductions on their last earnings call, suggesting that they were willing to sacrifice vehicle margins in the near term for their customers. He thinks the company will really benefit in the long run by getting more vehicles now in the hands of consumers and ultimately being able to sell to more people at these various price points. But Wall Street clearly not entirely sold on this approach here, as we have seen a lot of downgrades follow Tesla in the recent weeks and recent months, really, since that disappointing analyst day. But I have to say, I did watch every single minute of that. It was like 3.5 hours. It was ridiculously long. I think we're seeing signs of a more mature Tesla here. We're used to really, really consistent, strong growth, but that is not always going to be the case with a company that is settling into its space. And I think that those signs of maturation with Tesla are something that the street is going to have to get used to here, because it's not always going to be this massive growth engine it was, say, 5 years ago.
Jenny's so smart.
Right. Thank you for all of that. Jenny Horn, markets correspondent. Good to see you. Thank you. Let's get some insights, the news shaping the markets. For that, we welcome in Michael Underhill, Chief Investment Officer at Capital Innovations. Thank you for being with us. So we had an incredible week. Lots of economic prints.
Looks like Bezos.
We still are in earnings, talking about the debt ceiling, which now meeting was postponed. What are you looking at here? What did
I might take the long hair, a little inverse head and shoulders.
Well, I think what we've seen is continued volatility, uncertainty, complexity, and ambiguity. You've got
what did he say?
The warring factions in D.C. failing to come to any kind of
continued volatility, complexity, adversity
on the debt ceiling. They drop back and they punt. It causes some volatility in the fixed
Actually, he has a little hair
as
up
well
there.
as the equity markets, and what you've seen is a disorderly rotation from tech momentum growth into more value-oriented equity names. Ways to look at that are you've seen the bid in treasuries, but you've also seen the bid in utilities. It's popping up again this morning. I think you're starting to see what's the next phase of the trade, of which you're going to see sort of shorter duration assets and whether you're talking equity income and some shorter term fixed income, buy your treasuries and roll them. And I don't think it's sell in May and go away, but I think the traders are tightening their books. Long-only equity managers are being a little bit more cautious. And from here, I think the market takes a little bit of a leg down here for the rest of May and will be fairly range-bound for the rest of the summer.
Range-bound for the rest of the summer. So you're not necessarily predicting a recession.
So I think what we can all agree on is you're seeing inflation. It's sticky. We've seen some PPI, CPI numbers that were marginally better, but still hot.
What's a recession, Nicole?
When you look at the anecdotal evidence around the Fed raising rates and unemployment ticking up, the average time is roughly 14 months from when the Fed raises rates, starts their rate increase, to when you start seeing unemployment tick up. I saw this back in February 1994 to February 95. 14 months after the commencement of that rate increase, unemployment started to gently and then accelerate. And that's what you're starting to see as unemployment's picking up. It's going to accelerate through the summer. We'll see some meaningful pullback in September, October, of which there's seasonality to it, right? And I think that's what you're going to see is that slow slide into a recession. The depth of the recession, depth of the recession is going to be predicated upon the consumer and their spending patterns.
And that's a lot about the sentiment. I mean, we're basically hearing a lot about sentiment. Our latest sentiment print shows weakness. I have a guest later in the show who says all his clients have been calling very concerned, and he uses that just as color to really signify that sentiment is weaker. People are worried, and that hits GDP just like that. I mean, it's a psychological
Oh,
thing
so it is
too.
GDP. It has to do with recession.
You're right, Nicole. When you look at the greater context of this, the consumer spending patterns.
Well, when we had 2 negative prints, it wasn't
highest it's been in 30 years, and the consumers are combating inflation by spending more with their credit cards. Said another way, revolving debt's up, and their consumers are using their credit cards to buy groceries, which is not a good indicator of consumer patterns. And when you look at durable and non-durable goods across the complex, prices are up, and they're staying elevated, so the consumer's really taking a hit. And when the average American makes roughly $51,000 a year, that's a meaningful hit to their balance sheet. And whether you're talking the rate increase, mortgages, rent, shelter. So I think what you need to do is position your portfolios for sticky inflation, longer bouts of sticky inflation.
New low on barbecue.
Slide into a recession.
Low of the day,
and
16
again,
cents.
Inflation protection in your portfolios.
Down 15.75%.
Balance out your fixed income with your equity income. Think about your utilities, energy, and the long-dated assets with the supply-demand imbalance, and really trying to position your portfolio for higher rates for longer, stickier inflation for longer. And again, the utility and equity trade is something that I think longer term, it's a structural theme for the next 2 to 3 years.
You had some thoughts on energy as well, renewables, energy. I mean, I know solar is jumping today, but your thoughts on the group?
Yeah, so
looking for this inverted head and shoulders to hold,
it's not only hydrocarbons, so think pipeline operating companies, oil, gas, but also the renewables. And when we look at renewables, it's not only solar, it's not only wind, but you're looking at hydro as well as things like nuclear. You have a couple companies out there that are in nuclear, and specifically small-scale nuclear, which is accelerating in terms of a technology and a science to address some of the power generation needs in the marketplace. So I think when you look at it in your traditional E&P names, large complex, those are pretty easy. You look at some of your pipeline operating companies, whether it's Enbridge, TC Pipelines. I think the renewables complementary portfolio, you're going to see that the solar names are going to trade with a high degree of volatility. If you want some solar exposure with lower volatility, you look at NextEra, nice high quality income play with a renewable utility profile, as well as names like AES, which has not only exposure to renewables and solar and wind, but more interestingly, hydrogen. And then you can even place some of the more interesting names in nuclear, Constellation Energy, or even NuScale. So you can have a diversified portfolio across traditional hydrocarbons, renewables, and even nuclear to complement, and hydrogen to complement your portfolios.
All right, Michael Underhill, thank you for all of that.
Some golf and cane on the 5 minutes.
Appreciate it. Thanks.
Plenty
more to come right here on Trading 360. Our 360 Spotlight. We'll be joined by the CEO of 1-800-Flowers.com. We'll get the latest on the company's earnings, its acquisition of Smart
Barbecue
Gift,
almost down
and of course,
20% there.
Day.
Hi, also, dang. Soon for the bounce. In 32.
Day.
Oh, GME did have a big bounce there, though, huh? Yeah, I'm out of this SPY play. Dang it. Gave up my gains on the day. Oh wait. That one candle. Crazy V on GME there. Breaking 21? Probably not. Don't see the market being that bullish right now. Pretty bearish to me. Bear flag and more fleshy on the SPY. Man, I got out of that long at the right time. Jeez. I actually went short too. $0.15 on barbecue, down 21%. $14.50, 23%. Gap is almost filled. Well, we're getting it done today. That's good. Quick down there. %, on barbecue, down 14.3, or sorry, but down 24%, 14.30. And I think the gap is almost filled, 14.10. That might have been the low on SPY there. I don't know. I mean, that is a pretty big level at 410.83. There you go. Now the gas filled on barbecue. All this volume on the 1 minute here makes me think that might be the low. $14.01 on barbecue, down 26%. How do you guys like no halting now? Jerry. Want to get that spring out of there?
Here, so that's really what I'm looking for. You know, if tensions between the U.S. and China get a little bit better, I would certainly be interested in risk on. But you know, there's still a lot of talks about delisting. There's still a lot of talks about, you know, I guess maybe increasing tariffs. You know, applying the pressure or ramping up the pressure. It's just a lot of, you know, news-driven movement and sentiment-driven movement that I don't really think is going to be, you know, exceptionally great for investors. So ultimately, you know, if we get into this, you know, fade the market rally mode, realistically, Baba should be one of those names that we should strongly consider, especially if they can't recover above that 90 price.
How high bounces?
I like it back down to the 80 level. That's where we've seen some accumulation. And if they start breaking down, you know, again, next target would be somewhere around 76. Perhaps as low as 70, even 65. There's lots of gaps to fill on the lower end here.
Yeah, that jumped out. That phrase in your notes, fade the rally, is what he said about Alibaba. I mean, while there may be, you know, some move to the upside or potential, but fade the rally, he said. Ben?
Charles, you're talking my language here. Dialed in on the 90 level. Love it. That's a key area to watch. The fact that we just failed there and that we're taking out 87 this week could seal the deal for the lower levels that you have your eye on. Let's begin first and foremost with the more granular. I've got a 5-minute time frame here, so I don't want to make too much of this, but we do want to establish that we had been seeing a bit of a trend to the upside from, well, we're going 80 all the way up to 88 this week, and I want you to notice how we did take out a key level that was established on the way up, and that is, well, the $87 level. We always talk about these areas of value that form at higher and higher levels or lower for trending to the downside, in this case the upside, and we're constantly referencing the prior area relative to the one that we're currently forming. Here you can see the gap lower today and the weakness that we're seeing here that's played out since. So breaking down in terms of the trend to the upside, the working assumption that we're seeing value form at higher and higher levels, because clearly we're not anymore. Taking a look here at the bigger picture, I've actually got a 4-hour candle chart here, and you can see a well-defined trend top left to the bottom right. Direct your attention here to the top left corner. I want to show you what really caught my eye first and foremost with this chart. And on the 4-hour candle chart, you can see here we've got a very well-defined double top. This comes into play right around that 105 level. Charles, here's the $90 level that you mentioned. So this is a key area, right? The bulls wanted to see us get above that to invalidate this downtrend on the 4-hour time frame. But this little rally that we just identified on the 5 was unable to take out that $90 level, which was key. Let me just move on here one more step further into this discussion here, because take a look at the daily time frame here. Again, more time on this chart, longer term, but still a very well-defined trend to the downside. And this shows the significance of the $90 level on the daily time frame. It's where we're pivoting right now. So this is an important area, and we were unable to get above it. Again, just sort of reiterating where that bearishness that Charles is talking about. He was also talking about the 200, the 50-day moving average. I've got them identified here. We've got Alibaba, which is down on the year to date, about 3%, struggling, potentially rolling over here in a longer-term trend to the downside.
Right. Okay. Thank you for all of that. Good luck there at Alibaba and the moving averages as well, Ben. Any final thoughts, Charles, on that?
Charles Moon.
All right. So let's talk a little bit. Ben, you could give us a preview here and take a look at Netflix. When we look at Netflix, we see it on the move. It's been a real winner, right? Let me take a look where it is right now. As we see it at 340. Look, it's not bad, right? Year to date, it's up about 16%. Ben, what are you looking at the charts there?
You know, Nicole, give me 1 second. Let me get this Netflix chart ready for us here, because there were a few things that I wanted to point out in terms of what's going on with shares of NFLX. First and foremost, what I noticed is a very wide range trade. We were just talking about strength we've seen in the NASDAQ, right, relative to the broader market, especially the Russell. But the S&Ps and the Dow are very much contained. They haven't really experienced that same momentum to the upside. And as I look at Netflix, it hasn't really either. Here you can see you've got the highs from the beginning of the year. You have the lows from March, 379, 380 down to 285. And then look where we are. We were just talking about the significance of the $90 level in terms of BABA. Well, here you can see the significance of the 338 level, right where we are. Okay, 340 in terms of Netflix. But there's two things. The fact that we're on the pivot right now, and also the fact that this is a very contained stock here right now in terms of price activity. Let's take a step away from what we're looking at in terms of the hourly time frame. I want to show you what's going on in terms of migration of value to the upside. So contained, right, in terms of what we were just looking at, the January highs, the March lows, on the pivot at 338, but trending higher on the bigger picture. So we have migration of value to the upside for very well-defined areas that have formed: 186, 230, 286. And again, we're currently balancing right around this 338 area, holding just above it. Strength here opens up a door for a retest of the upper extreme, the highs from this year. Weakness, though, opens up a door for another test of that 286 level. Nicole, look at the 286 level here. Again, it was that area, the middle of the balance here that we formed when we broke out and started to form this area at 338. Look, we came back and retested that. It actually held. One more chart I want to show you here in terms of what's going on with Netflix, and taking a look here at the bigger picture, just in terms of the major run-up that we had seen and the significant pullback. We're just kind of trying to claw our way back in the middle of the range in terms of the sell-off we saw into the, throughout 2021 into the October fall lows of last year. So kind of inching our way back, but this is a stock that's mid-range around 338, testing a pivotal area right now.
Yeah, I mean, that's a great chart. That really shows the big picture. But I remember 286. I remember talking about that level in a big way. I mean, you just
barbecue
highlighted
1451
it
down 23.5%.
Back down to that level.
Gap has been
as far
filled.
as those lows, I see a low
Thanks
of
guys for your likes today.
52 weeks
27
ago.
likes in the day,
Charles
not
Moon,
bad.
tell us your thoughts
3
on
minutes
Netflix.
till European
you know,
close.
and what's really impressive about the stock is how fast that it has rebounded back since this kind of crater.
There's Charles Moon.
You know, this 350 level is going to be important. I see a lot of propellant for the stock to the upside, you know, exclusively pushing it up to 375, but the potential to 400 and the recovery to 400 is absolutely in the picture if we get above 350. What's going to be really key is if we stay above this 325 to 328 level. There's a collection of the moving averages there. They've just actually started accumulating around 320 in the near term, buyers, investors, etc. But if we happen to lose and get, you know, rolled over and lose that 320 to the downside, there is a key level to watch. It's right around 292. That's where the 200-day moving average is. There's a pretty attractive gap fill there. So, you know, Netflix had news today. They're looking to reduce spending by $300 million, which should improve margins. The idea that, you know, Disney's kind of losing their grip on streaming, they're still burning money. And, well, Netflix overall is holding up pretty well. Not showing the same growth that Wall Street had expected on this earnings report, but they did globally on their previous report. So if Netflix continues to rise and expand, they got other projects in the works. I just heard that Squid Game 2, which was extremely popular for Netflix, has started production. These are certain things that could draw new subscribers in, which is everything in relation to Netflix, right? What is the subscriber growth in North America? What is the subscriber growth globally? So we want to see if there's going to be a catalyst. I believe that the breakout alone could be a good propellant. But certainly, you know, this news of them reducing expenditures could be that catalyst to kind of push it up higher. And if it starts to roll back when this market comes down, well, then we're going to watch that 328, 320 level and see if the Netflix picks themselves up really quickly here.
All right. Thank you for that, Charles Moon. And then I'll turn your attention straight over to Crocs. Still a very popular shoe. Saw it on the subway today. The podiatrists say it's actually good for your feet. And the stock is still loved, even though it had a tough last quarter. In fact, sold off about 19% in a single day last month. But tell me your thoughts on this stock.
Yeah, and that's kind of the basis here. When we look at the longer-term trend, this is a stock that's been on a complete vertical run since their 52-week lows, very similar to how Netflix's long-term chart played out. Yes, off of earnings, they absolutely unraveled, and they came down right to around 109, and that's where we've seen, respective bounces come back in this stock. Both bounces previously led to new 52-week highs for this name. So I don't think there's going to be a massive recovery. I just like the idea that they're holding this pricing. I actually like it right back to around 120, 125 in the near term. I do believe that there's resistance up to 130, and once we get above 130, this is
15
where
cents on
the
barbecue.
possibility of a name like
VWAP's
Crocs
at
coming back to fill the
16.29.
gap at around 148 comes into the picture. And this is surprisingly a great momentum name. They have a pretty wide ATR. They trade nearly a $6 range every day. They trade on good volume at around 1.7 million average over the last 30 days. So it's not like this is a stock that's very light in the books, very thin in liquidity overall. And the fact that they came down to this level and immediately so far on almost every single day has been ascending off of this level certainly tells me that there was a lot of eyes on that price, and they were more than happy to buy the dip on this name. So as long as it maintains above 109, I love it right back to around 125 to 130. Above 130, I think we're filling that gap at 148. We lose that 109, it probably spills pretty hard, at least down to 101, the 200-day moving average, down towards 90 as well. So I don't want to think that this is not a shorting opportunity. It will be if it breaks that 109. It's basically breaking a triple bottom. But because of the initial response, because of the market dynamics, it certainly looks like it wants to rise again.
Yeah, well, it had that downbeat guidance, had that big sell-off, but it's undeniable. You're right. People do buy it when it's at the lower side of its levels. People somehow love this one. Ben, I know you saw it go from $25 up to $183. What are you watching now in the last 6 months or so?
Yeah, well, that 109 level, Nicole, is undeniable, but 121 was significant as well, and we took that out. Here you can see how we recently bottomed at that key level charge just brought to our attention. You can also see the conviction of the downside into that 109 level and how we're kind of balancing around 118. But I mentioned that we already took out a key level, Charles. That was 121. It was established throughout January, February, March of this year. Charles mentioned here 109, the significance thereof. You can see a bit of a triple bottom down here. So yeah, it's holding right now, but in my opinion, the 121 area was the line in the sand. And as I take a look at the bigger picture here, the longer term that Charles spoke to, you can also see the significance of 109. He mentioned below that we could open up the door to the downside. We took out the 50, barely holding above the 200. Lastly, RSI very supportive of what we're seeing to the downside. Have a hard time subscribing to upside momentum here. I think even though we're still holding above 109, again, that breach of 121 was key.
All right. Thank you both so much. Great to see you both. Ben, great on those charts. Charles Moon, thank you for those 3 names today for the big 3. Charles Moon, Prosper Trading Academy, and Ben Lichtenstein for the big 3.
Lichtenstein.
All right, coming up next, let's spotlight 1-800-Flowers.com. Now,
Why still melting?
Right, we saw the company reporting the earnings, announcing an acquisition. We have much to discuss with the CEO here on Trading 360. We'll be right back.
Northwest not looking good. This Bank of Hawaii is really, last couple of days have been pretty awful. I wanna play one of these into delisting. As weird as that seems, because it's probably kind of annoying. I haven't bought it, no. I'm gonna be patient. But very well could be the bottom. I don't like to usually dip buy. I like to really catch a momentum. Especially on something that's in Chapter 11 that's OTC and very risky. Yeah, but the 14 cents is there. We all saw the gap.
Points. So it'll take a little while for that adoption.
Can't decide here. Spies
People
bear flagging, but it's at that support
if that's
again.
what it's going to be. I mean, I know this is a Wall
Too early to go
Journal
long.
report, but it sounds cool.
I kept trying
we'll
to.
hear more. Kevin Green, thank you for a preview on that. That's a big deal.
Trend is
Senior
definitely
markets
down.
correspondent.
Or my notes, trade the trend.
Time to spotlight
Trade the trend.
1-800-Flowers.com. Let's welcome in the
Trended up
CEO,
yet.
Chris McCann's with us. 1-800-Flowers.com. Great to see you. Thanks for coming back on the network. You just had your third quarter. You're looking out to the fourth quarter where you expect to see margins continuing to grow. What's been working?
Great, Nicole. Thanks for being here. It's lots of things are working. What we see is our business. We've been at this for a while. When the market is a little bit soft, we see our customers respond appropriately. And what we've been able to do really is manage our gross margin. We're seeing good improvements coming there. Managing the EBITDA, the profitability of the business, we're seeing good improvements coming there. So there's a number of things that are working. Specifically, people want to celebrate Mom on Mother's Day this weekend. So we're here to help that.
Yeah, without a doubt, I'm sure. I mean, what's the price point? Last year we talked ahead of Mother's
This one
Day.
always
I mean,
rallies
we know that
for
inflation
Mother's
was
Day.
so hot, and flowers in particular were not exempt from that. In fact, they were very costly.
That rally?
Where are we in the price point of inflation and how it affects your business?
I think on the floral side of our business, inflation has not been really too troublesome on the floral side. It's been affecting us a little bit more on the food side of our business, where we have Harry and David, Cheryl's Cookies, Sherry's Berries. Sherry's Berries is doing great this holiday. 1-800-Flowers brand is still there for the rest of the weekend to give those gifts. So what we're seeing is the opportunity for people to realize that when you think about Mother's Day, and you think about all the gifts that we've given Mom as kids over the years, some pretty peculiar gifts, we realize Mom is the one who really taught us that giving is the actual gift. And that's what we're there.
Finally
And this holiday, we recommend giving is the gift because Mom deserves it.
That's good. I like that. I think people will bite. That being said, another acquisition, you have so many great names. You've mentioned some of them under the umbrella there. I mean, you left out and you didn't leave it out. You just are running out of time. You had Personalization Mall. That was another one. And I ordered recently from Edible Arrangements, and when I saw my bill, it said Sherry's Berries. So I didn't even realize that also somehow is connected. That being said, a new acquisition, Smart Gift. Tell us about that and why now is the right time.
So in the past couple of weeks, we've done two acquisitions, small tuck-in acquisitions. The first one was Things Remembered, which we put onto our personalization platform of Personalization Mall, and that's just going very well. And then you talk about something like Smart Gift. Smart Gift is a technology that we've been building with the founders there. Husband and wife team have done a great job of understanding gifting requirements. And the Smart Gift platform really gives us an opportunity to take what's an important piece of our business, corporate gifting, business gift services, to another level. So we can bring this capability to our corporate clients who are looking to track the return on investment when they do a client gifting campaign or an employee recognition campaign. We're able to show them the ability to track all of that and to measure the return they're getting. So helping them in their productivity as well. We're really excited about adding Smart Gift and adding Things Remembered and adding Vital Choice last year to our portfolio. And that's what we've done is we've built this portfolio and this great e-commerce operating platform that helps not only on holidays like Mother's Day, but all the everyday occasions like birthday and anniversary and get well. So we're here for our customers.
Yeah, and it sounds great because that really puts you with Smart Gifts. It sounds like it puts you into a real corporate footprint too, which is wonderful. That being said, tell me about the picture for labor and where we stand there, because it's my understanding that we may be going from a labor shortage where companies can't find the right workers to a labor glut, where they may talk about layoffs or furloughs or things like that.
Sure. I think, Nicole, it'll be interesting to watch how that develops. As we look at the labor needs for our business, we've been challenged in getting the labor, especially the seasonal ramp labor for the holiday season that we need so desperately for our orchards and our distribution centers, et cetera. It's gotten better this year. The availability was a little bit better this year, but I think it's because of what companies like 1-800-Flowers has been doing. We've been putting automation into our warehouses and distribution centers, eliminating the need for some of the jobs where it's just very difficult to get people. So we're doing things like that, or using AI and automation capabilities in our customer care center to bring a better quality service to our customers at a level that we can scale, and again, not be as reliant on human needs that we have, because they're not always there for us. So it'll be interesting to see how it plays out as companies embrace more automation and jobs in this country start to change a little bit about where the opportunity exists.
Yeah, I mean, I think that's something that all CEOs are talking about. How can AI help or change my business? I'd like to make some decisions based on what I know. Chris McCann, great to see you. Happy Mother's Day to your mother and friends and family, to all. Wonderful to have you on this important day. CEO 1-800-Flowers.com. Chris McCann, thank you.
Thank you.
Coming up next, disruptors. George Still is standing by. He'll talk about First Solar stock at new high. In fact, this is a 15-year high. Let's find out what's going on here. He'll also have an example trade for us. We'll be right back. Trading 360.
Russia's defense ministry says Russian strategic missile carriers conducted planned flights over neutral waters of Chukchi Sea, like right near the Bering Strait. British Columbia has paused direct investments in China with its public pension, the latest institutional investor to rethink its exposure to the world's second largest economy due to geopolitical risks. U.S. asked Egypt to close airspace to Russian military. Egypt ignored U.S. requests to block Russian military aircraft. Russia increased military flights to Syria in recent weeks. Pretty clean gap fill and bounce on barbecue. Very clean. See if we get to VWAP and then see if we get a kind of a double bottom or any sort of bullish reversal signal here. $15.79. On barbecue, down 16.8%. Stop by the Gap to fill up on propane for the barbecue. Nice. I didn't know Gap propane. That's legit. Thanks, not my name. Appreciate it, man. Feel like we're probably all gonna have a barbecue this weekend. But yeah, this one at 1.3 million. Ace Ventura bought more. Oh yeah, here. Big green, one smaller green. It's a buy signal. I think you bought more barbecue. You might not get a MACD flip here, passing cloud. Could very well hit a VWAP, use resistance, and kind of a double bottom. But yeah, I mean, you can see all the volume, as you mentioned, all the buying pressure on that gap fill. Definitely some people waiting for that.
The ego on you.
Thanks, Fire Marshal Bill. Appreciate it, man. Just ripping there. I'm stupid. Traded away my gains. And some. Over trading. Walt, you have been summoned. Appreciate the gifted membership, Ace. Walt, if you're not on Discord, jump on it. Send me a DM. Give you the happy crew roll. Come give Papa Ace a high five in chat. I have Pac West, but they expire today. I don't know what's gonna go next. Bank of Hawaii looks really weak though. We're just looking at that one. This one might be next. I don't know. Thing with this one, their puts, the lowest puts are like $21, so still pretty high if you're going for a delisting type of play. Yeah, VWAP on barbecue is 16.13. So pretty good bounce from that. Actually passed the gap fill a little bit, which happens, but yeah, it's almost a 15% bounce from where it was. Yeah. Here's to see what happens at VWAP. If it rejects or just kind of trades around there.
Co-founder of Category Pirates, and Dan Perino, Principal Wealth Manager at Savvy Wealth. Thank you both for being with us. Eddie, I'll start with you. I mean, what did you think about the data? I'm not sure everybody expected it to drop the way it did, but it really tells the story, doesn't it?
Totally, Nicole. The consumer sentiment roller coaster continues to go up and down. At some level, I would have guessed it might be slightly to the downside just because, according to the BEA, disposable income continues to decrease. It was 0.6% growth in January to 0.5 to 0.4 in April, 0.3%. So people have less disposable income than they did before. Consumer spending continues to pop up and down vis-a-vis the year, but it's one of those things where I think the margin that consumers have, whether it's savings or additional income or credit, continues to further away, and that I think people are feeling like they're going to continue to have to spend without that safety net, and that's probably what's driving their sentiment numbers down.
Yeah, I mean, with the estimate at 63, the actual comes in at 57.7. Disposable income waning, as you noted, Eddie. I thought, Dan, in your notes, it was really interesting how you said the clients you've been speaking to already feel like they're in a recession. That's not good for sentiment either.
Yeah, thanks for having me, Nicole. Yeah, so, as someone who spends most of my day, as a wealth manager in the community, speaking to individual investors, a lot of the feedback or concerns that I've been hearing from them have been about the safety of the cash savings in their local bank. They're worried about the debt ceiling negotiations, and they've been hearing about this potential recession here and just around the corner. But a lot of them have said that they feel like they were already in a recession. So from my perspective, I'm not surprised at all that the sentiment readings came in lower than expected here.
So, I mean, what are you telling them, Dan, as far as what to do with their money? Because as the debt ceiling situation looms, the uncertainty about, how we're going to fund government operations, the, reputation of the United States of America, there's talk that GDP can go well into the negative and consumers will really feel the pinch. What are you telling them, Dan, about how to position a portfolio? I mean, that's sort of the dramatic, finale. I'm not saying that will happen.
Yeah, so right now we're not making any huge adjustments just surrounding the debt ceiling negotiations, but generally speaking, over the past year or so, we've been really focusing on making sure that because of expense inflation, that they have the proper size rainy day savings fund and that they're achieving a competitive yield on that savings. So, whether that's CDs, high yield savings accounts, or money markets, we really want to make sure that they're getting the most bang for their buck there, so it's not eating into their purchasing power. A lot of them are concerned about their potential, lifestyle changes in the future if inflation continues to run hot.
A little break on VWAP there.
It is important that we have those
Barbecue.
conversations around risk level, that we don't shift too conservative, that we make sure that we're still, in a position to achieve long-term capital
Interesting.
growth.
It does make that
Most
retrace.
of my clients, they're
You
investors
guys
for
just
the long run,
calling that
and we
out.
need to make sure that
Best case scenario, we fill the
we
gap
can
and then
achieve
goes back
a
at
rate of
open.
return that's higher than the current
I wasn't
inflation
as
rate.
optimistic
So,
as that.
one big thing with the latest headline CPI is, it's now lower than the Fed funds rate. So we might be turning a corner there, but in general, the opportunity seems to be in short-term rates right now, and we're just beginning to leg back into core bonds.
Eddie, what are you thinking here? You talked about smart companies. What is the big picture thought here on how to survive this bumpy road?
Yeah, it's really fascinating. I think to what we were just talking about before, the debt ceiling, the news of inflation, the people who pay attention to politics and the news are older consumers. So boomers, those are the people watching cable news and subscribing to, kind of traditional media, and they vote at much higher rates than younger people. And what is so fascinating is there was a recent study by McKinsey and Consumers that said overall 40% of consumers said they intended to splurge in this year, but that number is 64% with Gen Z and only 22% of boomers. And surprisingly, when you compare and contrast, boomers are paying attention to politics, Gen Z do not. And so I think you're really going to see is that companies that are specialty niches versus the large national mass players, but people who go young are going to do really, really well because those consumers are going to spend. The categories they talked about was restaurants and travel, beauty and personal care, so more experiential types of things. And then also we see some real geographic nuances. Idaho's population grew 4.9%, whereas New York and Illinois and Louisiana shrank. And so companies that are more regional versus national, I expect to do much better.
Eddie Yoon and Dan Perino, thank you both.
Right, the bounce out of the low.
That's going to do it for us here on Trading 360. Thanks for being with me. I will see you at 2 p.m.
Yeah, you got your bullish MACD, your crossover.
Be sure to join me then. In the meantime, Fast Market is next.
That is true. Very valid. The Bank of England has said about 1.3 million mortgage borrowers are facing a crunch on their finances. Those households are likely to have to take on new loans at significantly higher interest rates, requiring them to pay about €250 more, $250 more. Barbecue 1668, down 12%. up above VWAP now though. SPY still ripping. What happened in 1669? Nice to have a historian in the chat. That I remember. George Washington sailed to Egypt. Nice little inverted head and shoulders getting built here on the SPY. Waiting for maybe a long entry if this shoulder holds. Looking like it. Not sure what's happening with those. IEP is, you know, you know what's going on with that. Watch the PP show. Now has they took a short position on the bonds as well. And then they're being questioned, I think. A little bit of legal questioning. Big red candle on the SPY. Oh. Look at that. Volatility. What the heck? Good news? That was weird. Repeat bankruptcy filings have occurred at the fastest pace since 2009. Barbecue going up, 1690. Only down 11% now. I did not buy at the gap fill, but hopefully some of you guys did. It was a nice pickup. Hi. For 80,000 delta now? What are you saying?
Now more on overseeing the product and software developments. Well, Linda will be focused on the business operations. Now she does come from
Jenny's in the chat.
Universal's ad unit recently stepped down, so there was rumor speculation her taking over this morning. We have now gotten confirmation from Elon Musk that will be the case, and I do think right now I'm reading the reactions on Twitter.
You're down 80K on them.
Fairly positive because Twitter has an advertising issue. There's no doubt about it, and that's something I think that is seen that she could come in and really revamp some of the advertising dollars that have led to this company being unprofitable for years now at this point. And one of my favorite notes we've gotten today was from Wedbush's Dan Ives, who called Elon Musk leaving as CEO of Twitter earlier than thought a positive development for the company, as well as positive for SpaceX. He said the development adds roughly $15 per share to the Tesla story, as the overhang with Tesla and Twitter, really, that relationship is now gone. Wedbush Securities did maintain its outperform rating on the Twitter nightmare, he said. So I do think that's a very good call, and I think it matters a lot more what this means for Tesla, because we oftentimes, discuss the future of Twitter, but it's not a publicly stock at this point. So I think right now, shareholders, we are seeing shares now start to sort of sell in the session here, down about 1.8%. We did also get reports that Tesla will be lifting its prices once again. The prices did cover all of its vehicles with the exception of the Model Y or Model 3, and did run as high as $1,000. We saw the price increases for the Model Y and Model S by about $1,000, and then the Model Y by about $250. Model S and X, which is our other luxury vehicles. So this a little bit, that this is
Annie, we're missing you.
Expectations now for their second quarter could sentiment. CEO Elon Musk did defend that these price reductions, really saying that he thinks this is what they need to do now in the near term. So I would say, all things considered, does seem like we weren't able to see any bit of a lift from this hold. So, take that for what you will. I think the market's really paying attention to right now this Twitter shakeup.
Jenny Horn, thanks for coming on as always, giving us the lowdown. Tesla making several headlines in one day. Jen, have a great weekend. All right, back to Nick Theodorakis, and now also let's bring in our guest for the first segment of today's show, and that is the Director of Trader Education for Charles Schwab, Mr. Joe Mazzola. Joe, well, welcome to the show as always. Thanks for coming on.
It's rejection, man.
A lot going on here, Joe, but you've been in these markets for a while. Everything seems pretty calm. Even in a down market, the VIX is still down, Joe.
It's almost a little too calm. I don't know. You guys talked about the summer doldrums a little bit earlier. No, I understand that. I do see, markets that, look, they've been range bound really since February. I think, 38.50 to 41.50 is kind of the range we've been in. And as you guys mentioned, look, the VIX has definitely performed like it should. When you are in range-bound markets, volatility compresses, the VIX compresses, the expectations for big moves start to compress. Even with, a lot of the kind of potential, right, and I stress potential, market driving events, whether it was earnings that we came through relatively unscathed. I mean, look, heading into earnings, March 31st, the expectation was for a decline of 6.7% in earnings, and we had a decline of around 2.2%. So basically, while that's still two consecutive quarters of declines, earnings came in a lot better than expected. Now, I think a lot of that had to do with the fact that, companies had made decisions along employment decisions. We've talked about the layoffs and the cuts, and that kind of helped the bottom line. I think the other thing that really helped the bottom line was the top line, and meaning the revenue. So you got a lot of the that inflation in the second part of 22 and into Q1 of 23 that allowed companies to continue to raise prices on their goods. Now, I guess the question is, will that continue into 2023? Are you going to have that kind of convergence where inflation starts to go down, but that doesn't allow for companies to continue with the pricing pressures, and how does that affect the margins, especially if wages continue to hold a little bit firm? That was a couple of things that came out in some of the data that we saw this week, is that wages are holding a little bit firm. So I think that'll be an interesting dynamic. You guys talked about the debt ceiling, at least at this point right now. I mean, markets are pricing in that something's going to get resolved, but time will tell there. Hopefully tell quicker rather than later.
Nick, there's a lot to talk about today. I could throw any one of 20 questions at you right now, but the easier thing to do is, what are you looking at? Is it the debt ceiling? Is it the data that we got this week? Is the data that we got next week? Is it the fact that we're transitioning to retail earnings? What is it that you're looking at?
I think the last thing you mentioned to me is really interesting. And all the stuff happened, and like Joe said, the VIX is hanging out at 17, and could be lower. I've been tracking this one-day VIX. I've been talking about it a few times, but VIX1D is the symbol in Thinkorswim, and you can see what the S&P one-day options are pricing, and it's interesting, right? So, and you can trend that out over time. So it's obviously chops around a lot more. It's about a 12 today, right? So not a lot going on, right? There's not, and to Joe's point, it's been very range bound. So good news for sort of sideways trading, right? The iron condor strategies are working right now, and those trades tend to work until they don't.
Give us the 30-second elevator view of what the VIX one day is. Does it measure the volatility day by day?
That's right. So it's the same calculation as the VIX. VIX is a 30-day look. So that takes into account 30-day S&P options.
What that tells me as an ex-trader, go ahead, sorry.
Well, so much of the volume has gone to the, everybody's talking about zero DTE, 0 days to expiration, which is just kind of a generic term for very short-term trading. Well, the CBOE's answered that by saying we're going to track the volatility on that and do the same calculation for the options that are essentially expiring today. So to answer your prior question, I think all that stuff's already baked in and vol is low. Next week, right, we start to get retail. We also get retail sales on Tuesday, and I think that's a big number because the Fed is starting to tell us, we're going sideways now, right? We're stopping rate hike. What do they need to see to actually cut rates? It's got to get pretty bad for Powell to go from we are not changing rates to we're going to have, between 1 and 3 cuts like the market's pricing in right now. Something has to change. And I think there's a few factors there. There's stuff around real estate that could start to crack. There's stuff around additional bank issues that could start to happen. But if the consumer really is pulling back and the consumer shows weakness, we've talked about this for years, Cap, 70% of the economy is, affected. So if the retail sales are down, we start to see a real pullback in the consumer because of the job cuts. I think that's going to be the story, and you're going to see Treasury curves kind of reprice and say, look, if the consumer's doing pretty bad, and that starts to get worse and worse, and we stack some data together on that, that is probably the most telltale sign of a recession, and maybe is in line with what markets are pricing now.
Joe, I want your thoughts on the one-day VIX, which to me, it just sounds like, is there downward pressure on volatility or upward pressure on volatility? It looks like a day-to-day measurement of that. And get your thoughts on inflation overall, because it's coming down, Joe. It's just coming down extremely slowly.
All right, well, let's start with the first one, the zero DTEs. And I think what Nick said was very appropriate. Remember, these aren't really 0 days, right? It's another way to say that they're shorter-term weekly options, but now they have expirations on multiple days each week, as opposed to the traditional Wednesdays or Fridays like we've seen in the past. So that I think that has led to some of the muted volatility. And I think, look, I mean, what I've seen in the market is kind of this expansion of convexity, and that's that's an option term, meaning that people have been buying options with expectations of a move. And what happens is when you see that on the retail side, what that means is that the market makers are selling those options. They're not seeing these big type of intraday moves, and retail's trying to use these as kind of a binary trading event type option. And the market makers they've been able to kind of hold those positions without having to really hedge those too much either way, and it's providing a lot of liquidity into the options market. And I think as you guys mentioned, that's provided some of that downside pressure on the volatility. Now, in terms of the inflation data, it came out, we could say fairly muted again this week, showing the right trajectory. But what I found interesting was some of the data that came out today, and that was the University of Michigan Consumer Sentiment data. I think that was pretty important because that fell 9% today.
Lord.
Basically back down to 57 and change. And that's the lowest point that we've seen since November. And that, to me, tells me that the consumers are starting to get a little bit weary in terms of what the economy holds. Even outside of maybe what's going to happen on the debt ceiling negotiations. But one of the things that really stuck out to me with their inflation expectations, while it for the year ahead declined to 4.5% from 4.6%, longer term, and this is what's going to be a sticking point with the Fed, the longer-term inflation expectations rose to 3.2%. That's the highest that we've seen since 2011. So what does that mean? That means that, consumers are saying, good luck getting it back to 2% in that long-term target. We don't see it happening. We see that there's going to be other issues along the way that are going to keep prices up. And that target of 2% is probably a long way away, or at least that's what the sentiment data says.
Nick, quickly here. I think inflation's getting murkier. I don't think it's coming down fast enough. The Fed is basically saying this week, we didn't say we're pausing. We just say we're looking at the data now. Is that the fact?
I think so. It's more of like rolling inflation as opposed to just something being very obvious. You see it come down a little bit.
This is
in autos,
huge bounce out of that gap fill. It's crazy.
Food. You see it it's kind of, we've been seeing whack-a-mole.
I wasn't quite expecting this.
How could they go up 4.4%?
I was what to expect.
But new cars.
I've not seen the stock trade on OTC.
So inputs are down. It's very hard to get. It's not like the one line is down. There's all this different volatility within all these different sectors. Food is, at home food prices we saw this week were down.
Yep.
Restaurant prices are up because there's still the staffing.
I agree.
There's so many things.
A lot of mixed data.
So they want data, they're getting it.
Yeah, exactly. I think that's really accurate. I think this CPI number that came out today showed a lot of
an RSI divergence on the 5-minute on SPY. See how this candle closes.
One part of energy was down, the other part of energy was up. I think it was really interesting. All right, guys, let's take our first break.
Be the low of this day right here.
And come back with our first trade of the show, and that is Amazon. We're looking at large retailers today ahead of their earnings in terms of Walmart, but
no news. No, not that I saw.
And this stock has made a pretty
it literally just went down
then.
and filled the gap
Let's
and
take
just
our
bounced
first
out of
break.
there.
Come back in 2
Crazy.
minutes with more Fast Market. See you then, everybody.
No, a week counts. Just has to trade in that area. No matter if it's closes there. There's no more gap because it's been traded. As of GME March 2021. And that's pretty ambitious, but maybe. Yeah, I mean there was definitely support at that gap fill. A lot of volume hit right at it. Yeah, I know on daily it'll probably be a wick down there, which is fine. Still filled. Close. Yep. That's it. Maybe not, Mohammed. If we do, it's probably because it's going bankrupt. I would imagine. I was kind of thinking maybe we'd consolidate here before we just ripped out of there, but no, it literally just hit and filled and went. SPY, new low, flush in there. That last support I've drawn. Or 10. Looking for a bounce here. RSI divergence failed me. Barbecue moving up. Wow. 1701. We're down 10.5% now. Crazy rebound. Yeah, I mean, their support's lower than here. This is yeah, if we start coming down here, that's a pretty awful day on the SPY. I opened my short up here. Some days I like to just open it. I get up on it a little bit, set my stop loss, and just let it ride. Just sit. But then every now and then I get something like this where I do that, and then it just does a crazy rip out of there. And I missed out on, you know, $300 or $400, whatever. So then the next time it's like, oh yeah, I'm gonna take profits, and I kept taking profits all the way down here, and then over trading got me messed up. I just opened it, did the stop loss, and just let it ride through all these bear flags, and just sat on it. A little bit far superior today. Cheers. Be a little better volume today on barbecue. All this volatility. Yeah, already more volume than yesterday. Yeah, yesterday's volume was 15.9 million. Today's is already 26 million. How many of you bought the gap fill? Bought a few. Nice.
It's hard to go broke taking winners, as they say.
Fascinating thing about the risk graph.
That's well done.
Is if you look at the cash input, if you look at the covered call, they have almost identical risk profiles. Yep. And Joe, I've spent my whole career having risk managers tell me, what if this, what if this? Well, what if it doesn't, Joe, right?
Yeah, no, that's a good point. And I think you guys, you broke it down fairly eloquently in that, you know, there's different ways for you to kind of reduce the risk structure of this trade by buying a put down below, but the trade-off is that you're going to give up some of that credit. And the way it's structured right now is that, you know, through that June expiration, it's right around a 1.9 to 2.2%, excuse me, return on risk should it stay above that level. You keep the credit, and if it does settle below,
Interesting if today closes low on the SPY for Friday.
You want to take delivery of those, or whether or not you want to.
We don't have a big bounce before close.
There's likely to be a decent amount
About 1,000, nice, 14 cents.
volatility in it. If it does break down
This
below
is the
that,
way.
so a roll opportunity could arise. But I look at a cash secured put like this. I don't put the trade on unless it's something that I'm willing to own. And not a recommendation, but I'm saying for any investor or trader looking to use that cash secured put strategy, look at it as something that you're willing to buy, and you're willing to buy at that price. Otherwise, the risk dynamics will flip once you get to that point.
It's about a 6% move down from here with no news pending, right? And the news that's out there, you kind of just go and Google it and look around, it's pretty positive. I think one thing that's really fascinating for Amazon right now, Joe, is the idea of the AI push, and you're reading more about this, and you think about what Microsoft's done. And you look at the business Amazon has, and it's fascinating to think what generative AI can do for them in terms of pushing product and helping bring together their different distribution channels. So the news is positive, and you're basically saying this trade's fine until you get down 7% with no negative news pending. So all that goes into the decision making on how to put this trade on.
And I'll give you guys the final thought process on a cash secured put. Let's say, for instance, you were going to put in a 105 bid for Amazon good till cancel. Well, it may never get there again in its history. But if you sell the 105 put, you get paid during that period, whatever period that is, until if it gets down to the 105. And then if it does, your entry level would be 103, not 105. So it's just another way to think of it. If you were thinking about putting in a bid below the market, a cash secured put is a way to do that and get paid while you wait. All right, Joe Mazzola, thank you for coming on. As always good talking to you on a Friday. Thanks for spending some time with us. We're going to take our next break, come back with our cash tech segment. Like Folio, Megan Brantley's going to be here to talk about Best Buy. An incredible look at Best Buy coming up. Don't miss it. Take a quick break. Come back in 2 minutes with more Fast Market. See you then, everybody.
Watchlist can help you keep track of securities you're interested in. To add a watch list to the left,
Just hanging out here. Looks like it wants to flush again. I don't know, dude. Crazy. Yeah, I mean, if it breaks, it's I think it'll hold this 410. I don't know. If it breaks there, yeah, you've got 408.87, which is a pretty long ways still. Yeah, dollar's been ripping, huh? And more by the end of the day. Yeah, I'm thinking I might pick up by end of the day too. You weren't able to buy the... I've not tried to buy on a Webull. Why is it hard?
Back to Fast Market, everyone. Kevin Hinks in for a vacationing Tom White. I've got Nick Theodorakis, and I've got the Vice President of Research for Likefolio.com, Miss Megan Brantley, coming on the show. Megan, thank you so much for coming on. As always, we're looking at Best Buy. What do you got for us, Megan? This company trades at a very low valuation. It got a very high dividend. What is the overall trend on Best Buy right now?
Yeah, so whenever we look at this, especially from the macro perspective, a lot of our high-level indicators are showing a pullback in consumer spending. So we see more consumers who are talking about trading down, maybe to
the bounce.
A
410 even with the low there on SPY. That's crazy.
We're seeing a lot of consumers who are talking about searching for deals, and we're seeing just a slowdown in these big-ticket item purchases. And so that's not necessarily the news you want to hear if you're Best Buy and you're operating in consumer electronics and things for the home and upgrades and really this discretionary type of feel. And you can see this whenever you look at Best Buy's consumer demand. So overall demand mentions of consumers who are talking about shopping with Best Buy online or in store, those are down by about 36% year over year. So I will say the only positive spin out of this decline in consumer demand is this has been something that's been going on for quite some time now. So we do see some signs of normalization in that decline in demand and decline in consumer purchases with Best Buy. And so because of that, whenever you look at the chart of purchase intent, you might say, oh my goodness, this is a really bearish looking chart, but we're actually pretty neutral when it comes to Best Buy, just because that demand decline has started to level off and started to normalize. So we're seeing this not just impact Best Buy, we're seeing demand decline and mention volume declines for a lot of the major retailers in our universe. Whenever you look at Target, when you look at Costco, Amazon, especially, Best Buy is at the lower end whenever you look at the consumer demand decline, but we are seeing this kind of industry-wide as consumer spending really feels a lot of pressure.
Hey, Megan, as you compare it to other companies that you just mentioned, the Costco's and the Targets, where it's more of a one-stop shop, does that factor in at all? When I think of Best Buy, I just think, you go there for electronics versus if I'm budget-minded now, right, I can go to Walmart, I can buy, my produce and a TV, and both of them seem cheaper. Best Buy numbers look great for the record, still, right, in terms of earnings, and it's fascinating. But are you seeing that?
Did you average up a lot at 14?
The multi-stop shop versus the one-stop shop in this environment changing at all?
Yeah, whenever we look at the overall mention volume for all of the retailers, 5 specifically, if you're looking at Walmart, Amazon, Target, Costco, and Best Buy, we actually have Walmart at the top of the pack, which I think is really fascinating and speaks to the point that you just made, where a lot of consumers are trading down. I know that Walmart mentioned on its last report that, they're capturing a larger number of those high-income shoppers. And so, they're growing their potential audience base that maybe previously would have shopped at a Best Buy or, splurged at a Target or something like that. And so Walmart's mention volume has actually increased by 5% year over year. And that's the only retailer of all those mentions that is experiencing some type of growth. And partially that's to do with its price point.
That's a pretty good average.
I think that
it's a great average,
long
actually.
term, whenever we look at this, we often look at consumer happiness levels.
Brought it up, I guess, but
that's an area where, again, we see Best Buy struggling. We also see Walmart struggling a bit. So it's a little bit of a mixed bag there. Best Buy does have a higher level of consumer happiness. So consumers who are going to Best Buy for these purchases generally report a better experience. But at least in the near term, I think consumers are, they're weighing that price
it happened
and
all just in a couple
the
hours.
overall consumer experience when they're making these purchases.
Megan,
we're off.
Your data in its entirety is a little bit hesitant on Best Buy, and I understand that. But I'm going to give you 2 reasons to be a little more positive on Best Buy. Number 1, in fiscal 23 that ended this past January, they made $6.29 a share. That is a lot of money for a company that trades at this valuation. That gives them about an 11 PE. But here's the more cyclical view of Best Buy. Everyone knows what happened in the pandemic, right? When everyone upgraded their electronics and the need for upgrading more went away.
It's hard to
but if the
figure out your average once it's closed out and reopened.
Replacement cycle is 3 to 7 years. Guess where we find ourselves in the next year or so?
Right
in the middle of that, that computer, that TV, that iPad. It's all getting old. Megan, and you're going to start getting into that range in a cyclical business where people are going to start looking
Yep,
again
new on SPY,
to
it's
replace
flushing.
things. Am I off base here?
Look for 408.98 as a
No, I think that's a really important area to watch for, specifically, if you start to see these resurgences and these mentions of consumers who are talking about replacing their electronics and talking about upgrading, we just aren't seeing those yet. So that might be indicative that consumers are just putting this off a little bit longer than they normally would have in this macro environment. I think one potential positive for Best Buy, an area that we're watching, is their membership option. So this is kind of how Best Buy differentiates itself from a lot of other peers, is its services and the tips and help that it can provide and the perceived discounts that it provides. And one thing that we've noticed is in the past, those membership mentions and usage mentions have dropped significantly. But Best Buy just announced, they're kind of restructuring this, and I think rightfully so. Whenever you look at this chart, you can see, they definitely need to restructure because people aren't using it, people aren't signing on, and they're providing some tiered options so that people can get in at the level that they're most comfortable with and some type of recurring revenue model that meets their needs. So I think this is one that we'll be watching to see if this change kind of brings consumers on board, because we know that these membership options, especially if you look at Costco, that's been one of its biggest value props as a company. Is just it gives consumers a reason to come back and shop. And so we'll see if Best Buy can get any traction there with these changes. So far, though, we aren't seeing any of that traction yet. We aren't seeing those upgrade models. So that's a little bit of a pause, and the reason for our pause whenever we're considering Best Buy as a bullish opportunity.
Sure. Yeah, that Best Buy service mentions graph that you just put up on that looks ominous in terms of its weakness. And but Megan, thanks for coming on as always. Thanks for spending some time with us. That is Megan Brantley, Vice President of Research at Likefolio.com. Have a great weekend, Megan. Thanks, Megan.
Thanks, guys. You too.
All right, Nick. Looking at a company like this, there's not a lot of great news. They continue to lower staff.
Buggy on mobile. I haven't used it a whole lot on mobile.
Journal article saying they're
going to
reduce staff some more. They are profitable. So here's the question I have for you.
Done that.
Are they a struggling company, or does how lean they keep staff? Because they already said they reduced workforce by 20% already, and now they're talking about more cuts. Is this just a well-managed company that stays ahead of staffing problems before they arise? Because boy, their earnings per share, these are good numbers they're putting up. This company seems to defy gravity. No one thought when e-commerce hit that a company like Best Buy would make it through this, and they've not only made it through it, they've done pretty well here.
Who else do you put in that same category
that you didn't think would make it through it?
I feel like I think of these guys and Home Depot in the same bucket. Like, it's the same type of, like, I want to go and see the TV before I buy it.
Right.
I want to go and pick out my own lumber to build my deck or fix something. Like, some things just for whatever reason so far
you got to touch, you got to see
haven't translated well to going online, right? And what's really interesting, like shoes is a different example, right? Like,
sure.
I'm that way. I need to try on my running shoes before I go buy them. So it's another product for me that falls in that category. But shoes have done really well online, right?
Yes.
So
because once once you get a shoe and a company that you like,
it's easy.
Then the size remains.
You're hitting my point. So if you know you want a Samsung television or an LG television, and you've got one you need to replace, at what point does I'm just thinking of your question, like, how, does it turn over for Best Buy? Is there a point where I'm just going to go and buy the similar television, Samsung, at
Is it still in beta, that new,
I can save
their
$10 because that matters? Or
UI?
am I going there for some differentiated
maybe going back
experience?
to the older version
am
would
I
be
getting
better.
better advice on what it is? Do I need that advice anymore? Or is technology so commoditized now that I just want a cheaper TV because that's from? I think that's the question.
Okay, I'll play devil's advocate there.
Yeah.
If you walk into a Best Buy and say, "Tell me about this TV," I may trust that guy more than I trust the clerk at Walmart to say, "Tell me about this TV."
Doubt. And is that trend going to continue?
It's big and square. Right. It's big and square.
Is that trend going to continue, or is it going to change? I think there's some really interesting, probably analytics that have to go into that. I don't know when it's going to, but it feels to me like it should roll over. I used to love Circuit City. I'm dating myself. And I thought they knew their stuff, and they've been gone for a decade now, right?
They did, right until they closed. Right? They knew their stuff.
And then, so I don't know, is it going to roll over or not? I think your point, you were
maybe
talking
it's a
about
full
this during the
version.
break. They are so profitable, and it appears, at least for now, that they are ahead of, and they've been managing their business like others are trying to do now.
Right.
You say all the time, Mark Zuckerberg's now a real CEO. These guys have been making these decisions and managing costs for real for a long time. So I think it bodes well for their longevity because they've already been through these cycles. They understand what it's like to deal with a leaner environment.
You have a trade in mind. Tell me what you were looking at here in Best Buy.
Yeah, I was looking at the 67-71 put spread. And this is kind of based on Megan's data. It all looks pretty negative.
Bearish play, though. I'm not buying the 71, selling the 67.
It's more aggressive probably than even the trade looks on paper if you look at the chart, because they haven't really been below 70 very much, period. So they've been trending lower, right? The stock's been trending lower. The real question here is, are they going to break below 70 and kind of stay there? To have maximum profitability on this trade, you need to be below 67. They haven't been there.
If you look
quite
at the
some
chart,
time.
it's pretty plateaued. Right around here. It seems to be supported.
So
new
you're
low of the
looking
day.
for a bit of a breakdown. I just think there's a lot of what are we going to hear retail sales next week? We already talked about that. What are we going to hear? About the debt ceiling. If people get nervous, this is the type of stuff you pull back on, right? And you do go to Walmart. You do go to Amazon and buy an off-brand to save a few bucks, right? You don't need to go and buy the highest-end television to turn the news on at night.
We're going to talk about Walmart in the next segment.
I know. So I took a bit of a bearish stance here. I just think it's the example I think is important because Joe was talking technically about looking at the charts important. What are the levels here? And this is a pretty aggressive level. You're looking for it to essentially break through that support that it's had around 70 and go lower for maximum profitability. This the long put here is right at the money. So you need to move lower for this to to actually be profitable. You need to kind of make a new recent low for it to be at max profit.
$4 put vertical. You're spending about $1.45 right now on it, Nick. It's about 20 short deltas. You're actually paying theta as you would on a vertical spread. So this one, like I said, it gives you about 20 short deltas. So this is a downside play in Best Buy. If the downside is not where you think, this is not the strategy for you. It's risk defined. All you can lose is the 144 that you spent on just trade. Final thoughts.
But the flip side, it's relatively expensive, but your profit, it's 140 you're roughly paying, but you're making 260 if you realize that. So we always talk,
almost a triple.
It's risk and return there, right? So it's a little bit of a better ratio because you're buying a juicy at the money put, and it's a $4 wide spread. So if you do get that move, then the return is certainly there. However, you need the move to happen, which is why your profit, your profitability looks good because the chance of that move happening, is certainly not guaranteed.
Yeah, it's an interesting look at a way, and like I said, I've said this before on this show.
Remember, that short
if you have long stock in Best Buy, this is a way to short-term take the other side of the market. It's about 20 and a half short deltas per spread. So it's a way to hedge in the short term if that's something you want to do. And remember, the risk on this, you still don't have any upside exposure.
Coming down
you
a
would
bit.
just lose the 140, 145 area that you spent on this trade. All right, let's take our third and final break of the show. Come back with George Tillis and Nick talking about Walmart, the other retail behemoth. We're covering them all today. Take our final break of the show. Come back with more Fast Markets.
Nationwide, retail sales of Bud Light were down 23.4% versus a year ago in the week of April 29, worse than the 21.4% decline it suffered a week earlier. Still hitting them. California's Governor Newsom has declined to publicly support reparations payments recommended by the California Task Force, equaling $1.2 million per resident. International Monetary Fund has cautioned Zimbabwe against adopting a gold-backed digital security to deal with macroeconomic challenges like volatility in the local unit, saying think it should rather liberalize its foreign exchange market. BBBYQ to VWAP. GME is back down below level 2037. High coming down more. Charge point down 4%. For a bounce on this $8 level. Got earnings in a week or so, a couple weeks. Are ending soon? What? BBBYQ to VWAP 1610 down 15%. If it hangs out around VWAP for much. Got 10 minutes to 1 o'clock. Reverse and shoulders. BBBYQ, yeah, could be. Like that head, shoulder, shoulder. Yeah. Could pick up some shares here. I don't know. I don't know if I care to have exposure over the weekend or not. I wanted it, and I don't want to see how this plays out. I mean, the momentum's still to the downside, but we did get a nice bounce out of that gap fill. So, on the short term here. On the daily, not bad. I mean, MACD's still bullish. Still kind of a bull flag of sorts. Do it. Barbecue below VWAPs at 16 cents. 15.75. I don't know if there's a whole lot of day traders in the OTC market. Sure, there's some, but I don't know how prevalent it is. The fees and stuff, and the typically illiquid and wide spreads. I don't feel like it's traded daily as much.
Thanks, George.
All right, let's get right to our trade after a couple of comments. Nick, this company makes more than half their money off groceries.
Yep,
right?
60%.
You can make a case that discretionaries have struggled.
Yeah.
But this stock's had a great run. It's up about 68 on the RSI. It's rallied about 11.9% since March 13th. So it's having a nice 2-month run here.
Yep.
Looking at a trade in Walmart, remember they've got earnings on the 18th, which is next Thursday, I believe. So looking at a trade, what we wanted to do, this is not a big premium name. This is not a name that jumps out. But quickly here, what I did, I sold the 150 straddle, right, which is lower than where the stock is trading right now. So it's a bullish trade by definition. I bought the 155 call and the 147 put. So only $3 wide on the downside, $5 wide on the upside. That's where the risk is. The downside, because you collect 360, 365, 370, you're insulated from losses on the downside. But obviously, Nick, I need to go quickly here. The 150 strike is what you're looking at.
Yeah, and you really see that pinnacle of profitability at 150, and it's a sharper, it's a steeper slope than you see, so because you got both the short call and the short put there, and I like how you've structured it, with a bias. So if we really do tank on earnings, you have no risk to the downside the way this is structured. $3 wide downside, $5 wide upside. So your risk here is to the upside. Given what we just talked about with George, I think you could argue that the outlook's pretty positive. Right. You can easily flip this on its head and put that risk on the other way, structuring it to where you're targeting a specific point, but you only have one directional risk, even though it's an iron condor type.
You collect about 360 credit on this.
Yep.
And what you're trying to do is buy it in for as little amount of money as possible. Like Nick said, the risk is on the upside. All right, that's our show for today, everyone. I want to thank Nick Theodorakis for coming in and spending the last hour with us. Thanks for everyone who came out today. Have a great day and a great weekend for all of us here at the Teeter Ameritrade Network. Jenny Horn and Alex Coffey up next with Next Gen Investing. Have a great weekend, everybody.
Excuse me. Barbecue. Barbacoating around VWAP. Essentially for a bit. For sure they're calling you up. Yeah, well, the only guy they have on their show is that does TA really. I mean, they have, I guess, just random guests, but it's your copy, and he's influenced by the chat to be bullish, so looks at everything super bullish. Fortunately, he probably does good TA, but it's a lot of pressure to be bullish. But yeah, I mean, it seemed pretty obvious to most people. I feel like it wasn't anything special. It's hard to know though. I mean, we don't know how it's going to trade on OTC. That's where I'm like not very confident. I'm like, I don't know. You know, if that stuff, everything still applies. If it's all, you know. So we're learning. Like, I think everybody is that's newer to OTC and the wider spread and liquidity and everything. Because once it starts barcoding and stuff, like then there's not any TA to do. Has to get the volume and actually start moving around. But yeah, worked out nice. I mean, it's a nice bounce. It depends on if it's like a gap fill and it just continues to rally, or if it's actually just coming down now. The way it bounced out of there, it seems pretty bullish. Like, it's not going to keep coming down. It might kind of retest it or consolidate a bit, but it doesn't seem like it's just in a sell-off, because that's a heavy support with all that volume. Does Pete do TA? I thought he just looks like all the filings and stuff, all the court documents. Yeah, I guess, I mean, they all kind of do. And yeah, they were saying it too. I remember people saying there's a gap to fill, and even without that gap though, I mean, it was pretty, it was a pretty clear head and shoulders. I mean, this was my thumbnail 2 days ago, head and shoulders and a bear flag. It looks kind of weird because it's, you know, barcodey, but still it's there. But then, yeah, having that gap to fill just adds strength to that head and shoulders, I guess, the way it looks. Yeah, those guys get so much hate. I kind of flagging down here too. Pistol Pete. You're low on SPY there. Gotta trade it pretty wise the rest of the day to make up for my lack of discipline today. BBBYQ. Little low drop there below VWAP. 6. I think with TA too, like, everyone wants answers from technical analysis, but oftentimes there's not showing anything, you know, and so if you're just trying to get answers from it, like, sometimes it won't give you answers. You just have to wait until it shows its direction or confirms some sort of technical analysis pattern or whatever. So when you're like, oh, what's it gonna do? What's it gonna do? It's like, yeah, you could start just drawing a conclusion and say it's gonna do this, but really, if you're looking at it subjectively, there might not be any indicators to you that are, you know, what you need to see, basically. So, and I don't know is a fine answer, I think, for anything, including technical analysis. Not giving clear direction. There's a new low on SPY. I don't know who Chris is.
Regional banks are a major uncertainty and
I'm
add
looking
to
to
a lot
maybe
of questions that investors
switch to
have.
longs
So
some point today. I think we're going to get that
but
bounce.
holding about 4,100.
And we still have gotten a lot of strong earnings reports this week. I know we've seen some moves to the downside, but we have seen still our fair share of moves to the upside. So we'll be kicking things off here with our upvote and downvote segment. Following that, we will chart and trade those upvotes.
Can't let a Friday just
name today
big red candle.
Solar surging towards
That'd definitely be bearish for next week.
Since 2008. We'll dive more into what's driving
engulfing
shares higher
candle.
later
Wow,
on.
we actually might end up getting an engulfing today.
Downgraded at
Most
Jefferies
likely.
And shares are falling
there you
in
go.
reaction. Last but not
Even
least,
if we get a
our
big
under 30
bounce,
name is
411.35,
Paramount, which is continuing
still gonna be
to
engulfing.
see some downside here, and we're only seeing the analyst community further build on some pessimism around Paramount. So a lot to get through today, Ben. We do have tons of earnings, post-earnings moves, as well as some new specific stocks to
Quest
take
is
things
coming
off.
down.
So we'll be starting
Need to come down a lot.
downvote segment. These are not recommendations, just names
Like
that are seeing
to
some sizable headlines
$4.
today. And of course, I'd say one of the biggest headlines of the day is Tesla. So
$4.
Tesla has a ton
Oh,
of
yeah, it's
news
getting there.
out
Wait a
today.
minute,
We are
wait.
seeing shares down about 2.5%.
Oh,
They
maybe
were
way
actually
more.
initially higher off the open this morning, erasing all of that gain now intra-session. And we did get reports now. CEO Elon Musk did tweet, or I guess former CEO, I should say, did tweet that he has named Linda
what am I putting on here?
as
50
the
cents.
new
You need to come down to
CEO
50
of
cents.
Twitter. He said she will be focusing primarily on these business operations, while he'll be focusing
A
on
low
product
gap down there,
design
PacWest.
and new technology. This was read collectively
Is
from
the
the
bottom
street.
on the
I think
SPY,
it's
finally?
positive. We saw Wedbush's Dan Ives say that this was a really positive development for the company, as well as SpaceX. But I think, oftentimes we get clouded with what this means for Twitter, Ben. I have to say, when looking at Tesla shares, that's what matters. That's the company we're looking at, and those are the shareholders that have been affected by his deal with Twitter.
Okay, absolutely. First and foremost, Jenny,
I'm about
lots
to
to
get
break
stopped
down
out.
here. You said Tesla making headlines today. It seems like
Stopped
Tesla
out.
makes
We'll see.
headlines every day, or Elon Musk in one form or another. And, you were also talking about, well, some of the fundamentals behind what's going on. I actually dialed in on the technicals here, and I noticed that at first we did see that positive reaction to the news of the
I had
new
a bad
CEO,
entry on
the
that.
announcement this morning.
It was
The
a little
shares started
flip
to
trade
sell off.
for my
We're
long.
lower on the day
Flipped
right
them to
now.
shorts on that
The
break.
move that we saw up recently actually invalidated a trend that we had been seeing to the downside. So taking a look here, though, I just want to show you what's going on with the hourly time frame, because since the beginning of January, you can see how shares rallied up to 195, and then they've gone a bit more sideways since.
Now that
There's
we
just
filled
not a
that
lot
gap,
of
we might
conviction
actually
in the
start
stock.
finding some
Basically,
supports.
since March, we've been kind of
Right here on
chopping,
barbecue.
meandering around and just below this 190
15
level.
cents.
But taking a step back from the hourly time frame, the big run up that we saw in the beginning
Yeah,
of the
I
year,
can
the
see that
sideways
happening.
consolidation, you'll
Kind
see
of a higher low.
the daily time frame shows a little bit more of a clear picture, a bit of a downtrend.
Not sure we'll get a
since
full
we're going back to
retest of
August of
that
last
gap
year.
fill.
Now this is interesting because when I look at Tesla, I tie it into that bigger tech discussion. You've got the NASDAQ. We were talking about the S&Ps at the top of the show, but the NASDAQ's above the February highs. Look at Tesla, nowhere near that Feb high. That'd be up around 218. Again, so still sort of in this downtrend. And as I look at Tesla, I noticed here it was hanging out right around or just below the 50-day moving average. So I'm interested to, when we talk to Rick about this one, to see if that's a level he's watching right now and kind of how he's focused on that area in terms of maybe even incorporating a trade around it.
Yeah, you mentioned this technical shift we've seen really since March, coinciding very perfectly with their Analyst Day, which was a pretty disappointing event. We've since seen the bears really pile on in this name. So we'll be upvoting that name today, as I always think it's worth taking a second look at Tesla shares. Our next name today, though, is PayPal. Now, PayPal has also had its fair share of woes as of late. It's down 3% now on the session. BNP did downgrade shares today to neutral from outperform. With a price target of $58, this implies about 8% downside from where we're currently trading. Now, of the 17 analysts that do cover PayPal, the average price target is $94 a share, which is still about $32 above where we're currently trading. So the street does still have a pretty strong conviction in this name, and it actually shocked me to see of the 17 analysts, 11 do lean bullish, 6 are neutral. There are no bears in this name, despite some lackluster price activity. This follows, of course, PayPal on Monday reporting first quarter revenue that rose 9% and beat estimates. Bottom line also did exceed forecasts, and we also saw some really strong metrics from their total payment volume as well as payment transactions on a year-over-year basis. But this was not enough to please the street, Ben. Even remarks from the CEO saying they are very confident in their momentum now so far this year was not enough to lift shares, as we're seeing shares down about 16% now week to date.
Yeah, I mean, look at the move on the intraday just this week alone, Jenny, on the 5-minute candles. It really says it all in terms of some of the weakness, some of the selling that's coming into play. Top left to bottom right in a big way, from $78, almost $79 down to $61.85. And as I move away from PayPal and just take a look at what's going on in terms of the bigger picture, look at that move we just saw in terms of that selling this week. It has them in a vertical phase. We're going to talk a little bit more about
PayPal's still selling
two
off,
phases of price development later on in the show. But this is a vertical phase where
we broke that low. That was a big low.
Downside. The market is seeking value at a lower level. You can see that in terms of the conviction. Lower lows and lower highs with these big red candles to the downside relative to the phase that we're coming out of right now, which is a lot more rotational and overlapping. Down below the 50, down below the 200. There's some conviction associated with this selling. It's not just today.
Yeah, and that is an ugly chart, Ben. So we'll downvote that name for today just to avoid perhaps some of the negativity that's associated with PayPal right now. So now taking a look at our next name, which is Disney. And Disney, of course, saw a pretty massive slide yesterday in reaction to its second quarter numbers, where it seemed like the only thing the street paid attention to were its subscribers, particularly in Disney Plus. Wolf Research today, though, downgrading shares to peer perform from outperform without a price target. And this analyst said the company's direct-to-consumer subscribers and linear TV outlooks keep deteriorating. The firm did say that Disney's plan for greater subscribers as well as higher prices and lower costs seems like cognitive dissonance at this point. They did know that Disney Plus subscribers forecasts are looking risky, and the company's linear TV outlook is deteriorating, and that the $2.5 billion worth of hard cost reductions are now priced into consensus estimates. Disney is also undergoing some layoffs right now. They have previously announced about 7,000 roles they would be eliminating, and Bob Iger did highlight this on his earnings call. Not enough to please the street, though, as we're seeing shares pacing to close down the week about 8.5%. They're now 27% off their high. Although I do think it's notable to point out that they're still up about 6% year to date. So compare them to some other media companies like Warner Brothers, Paramount. Relatively speaking, when you look at a 12-month basis, they've still been relatively fine. I mean, they are down 12% in the last 12 months, Ben, but with yesterday's monster move to the downside, I think at this point you can take what you can get.
Absolutely, Jenny. I think that last point is key, especially when you compare it to a name like PayPal in terms of that big move lower that we looked at, the breakout, the vertical conviction to the downside, because Disney on the bigger picture is more range bound and kind of hanging in there compared to some of the other names that are opening up the door to the downside. But speaking of opening up the door to the downside, and much like PayPal on the more intraday time frame, we're looking at 15-minute candles here, the move lower this week. Disney also came under pressure from 104 down to 91, and kind of in a similar fashion, let's move from that intraday look as we did with PayPal, and here you'll see what I'm talking about and what you referenced, the difference, right? A bit of a breakout to the downside, but still relatively contained. You can see how this move lower is still holding up above the March lows, kind of retesting that $90 level, well above the lows that we saw beginning of the year, down around 84, 85. So holding below the 50, below the 200-day moving average, but again, kind of contained at this point and somewhat limited in terms of real energy to the downside until we take out that big level. I think that the bulls still sort of see this as a test of the lower extreme possibly.
Absolutely. It just feels like sentiment right now around Disney specifically is so negative. We will be downvoting that name for today's sake because we've talked to Disney all week long. Our last name, though, I mentioned an ugly chart in PayPal. Our last name has also a fairly ugly chart. That is Twilio, as shares are down 7.5% for the year, also down about 3.75% now on the session. Mizuho downgrading shares to neutral from buy, reducing their price target.
Grab another short on the bounce here, honestly. I'm not thinking there's a real
pretty sizable price target cut, still implying about $10 of upside from where we're currently trading. But they did note the company's first quarter guidance of 4 to 5% year-over-year revenue growth was meaningfully below the consensus of 11%, which reflects this difficult macro backdrop as well as tough comparisons from crypto that will likely continue to pressure growth over the near term. They do expect their growth to remain more subdued, and they do not see a near-term catalyst for the shares.
This was a total fake out.
Forecast, I also want to point out, marks the fourth quarter in which they predicted to lose more revenue than the street had been anticipating. So not what you want when you look at this 12-month picture, and shares are down 54%, down 60% from their 52-week high. Outside of Mizuho, we're also seeing other analysts come in today, trim their ratings as well as their price targets. KeyBank as well as Baird, Barclays, Goldman Sachs all reducing their prices to reflect some lackluster quarterly results, Ben. So picture does not look too pretty. Excited to see what you have to say about the charts, because I can't imagine it's very strong here in Twilio.
No, it isn't, and it's not really anything good to say about this chart either. Much like what we we're just talking about in terms of PayPal, in terms of the move lower that we saw in Disney, you'll see a very similar pattern when you're looking at the more intraday, more granular, and one could argue even on the day time frame in terms of some weakness, and as far as what we saw with Disney, relatively contained price activity. But here you can see the big move lower. This comes in reaction to earnings. You can see the sideways consolidation after, which occurred around that $47, $48 level, and then you can see an attempt to break out down below recently down to 45. Now this has been somewhat limited in terms of real conviction to the downside. You can see that high energy, that big move from 47 and taking out the lows, making a new low for the week, but you didn't get a lot of follow through. Let's step away from the more granular time frame. Taking a look at the daily, you can see a similar pattern in terms of Disney rolling over below the 50, below the 200, testing the lower extreme of range that we've been in basically this year. But I did notice RSI is somewhat limited in terms of participation to the downside. It hasn't really been accelerating to the extent that the bears would like to see it. The bulls here, again, much like Disney, are kind of hoping this is just a test of the lower extreme ultimately, and key areas of support hold.
Yeah, we'll be upvoting this, Dave, as I do think this note was compelling given the fact that we have seen this weakness, and also this stock is expected to close down this week about 13%. So worth diving into Twilio more. We'll also, of course, be looking at Tesla. We'll be breaking down the technicals as well as looking at some example trades. Stick around to Next Gen Investing. We'll be right back.
Yeah, might have been a good short there. Got that old tweet. Thinking maybe a double bottom test here on SPY. We'll see. Never really made it to that support, so one reason I didn't buy that low. Shareholders own companies. His plan's working, just growing an audience. From GME now over to barbecue.
the day following that announcement yesterday that Elon Musk will be stepping down as Twitter's CEO. And initially, this was seen as a positive thing. We saw shares higher. They've completely erased that gain now, down about 2% on the session.
Yeah, you know, Jenny, I would argue that this sort of feeds into what we've been seeing in terms of the broader market, right?
Yeah,
intraday volatility, but not a lot of really well-defined trend one way or the other. Tesla had a huge run-up to begin the year. If you remember, you can see that on the left side of your screen from 100 all the way up to 217. But then you can see we kind of started to falter a little bit in terms of follow-through and continuation. You can see we took out the 170 level, and as we just zoom in and take a look at a little bit more time and bring this chart up to date, you can see since then not a lot of conviction one way or the other. Mostly chopping below 190, holding up above 150 for the most part. I wanted to show you what's going on in the bigger picture here because I think this 160 level is going to be key. I'm curious if Rick is keeping an eye on that area. It's kind of the middle of this range that we've been in since the end of October, beginning of November. But here, Jenny, on this chart, you can see a very well-defined trend environment to the downside. So Tesla kind of invalidating that trend up on the more intraday time frame, which is in line with that trend down on the longer term. Let's bring in Rick Ducat. He's joining us to help us talk technicals, dive a little bit deeper into what he's looking at in terms of price activity and shares of TSLA. Rick, welcome. Talk to us. I noted that key area, that sort of pivotal zone. We're in the middle of a range that we've been in since last fall, basically. I'm curious to see what you have your eye on as far as shares of TSLA.
Well, I think we're pretty much looking at the same areas here, Ben, but I'll dive more into that in a second here. The first thing that caught my eye is that we've been trending downward since we had our earnings all the way back here in October. So we've been making lower highs from that point, just a gradual trend downward. We did have a nice recovery off these yearly lows near 101, but we can see that it hasn't really transitioned to a new uptrend, so to speak. We've still been making lower highs. We've been kind of largely sideways ever since we had the last earnings event in January here. And the thing that really caught my eye here was this gap. This gap between about 145 and 155, that was about where we found some support near that 155 mark during our most recent downward excursion here. So we can see now that in the more short term, looking at our price action today, we were up a good bit more as the day began. We found that we opened near the 63-day EMA, that's this orange line here, but we're rejected pretty severely at that point. Now we're down over 2% on the day and breaking through our yellow 21-day exponential moving average. So trending through to the downside in that name here. It'll be important to see if we can hang on to that level into the close, maybe claw our way back above it. That could be some support to watch going forward then. RSI, our measure of momentum down here, you can see that we have been on the move upward here following price action, but we had something happen here that we did not clear above that 50 midline level, so that was something that was notable as well. So going into our trade here, the gap that I mentioned earlier, this 155 to 145 level, was what I wanted to base an example trade on here. So I decided to set up an example of a short put vertical here. The 155 and 150 strikes are what I had my eye on there. So we are collecting a 120 credit for those, neutral to bullish trade, break even 153.80. So kind of putting us right in the middle of that gap area where we had such thin trading volume. Could be an area of fast-moving prices, so beware. And I chose that 155 level because that was the beginning of our gap, and 150 is the area of our value area. This thick yellow line on our volume profile, that's also a source of support. So if we do break through to the downside, that would be that. It would be okay for us because we're risk defined here. We're not going to lose the farm on this trade. We are capped at our risk about 3 to 1 in terms of risk reward here, about $380 for our max loss. You know, the nice thing about a short put vertical like this is it's a softer target. We don't necessarily have to be exactly right. We just have to be kind of not wrong in our hypothesis that we'll stay above that break even. As long as we're above that break even by the time we expire, we'll make some profit on this one.
Rick, I love it. You don't have to be right. You just can't be totally wrong. And I think that that's a sentiment Alex oftentimes echoes. So now to shift gears here and look at Twilio. Starting things off with the charts, Ben. Twilio shares are down almost 4% on the session, pacing to close this week down over 13% following some lackluster quarterly earnings. So walk us through what you're seeing from a technical front, because I actually even got excited about the technicals here just because it was such an ugly chart.
Yeah, it's absolutely well-defined trend environment to the downside. This is what I like to call, Jenny, a textbook environment. If you're a student of price, and well, especially your viewers, all of us are, right? If we're trading, it's the eternal study ultimately, I think, then you should be looking at this one closely, whether you trade Twilio or
Watching
not,
this
because
MACD,
it is, as I mentioned, an excellent example of a very well-defined trend environment. Now, for this example, I want to start with the bigger picture, the daily, and then we'll get a little bit more granular into the more intermediate time frames. But here you can see we're going all the way back to, well,
I actually found a bottom after I finally shorted it.
March, we're talking
look at you,
April
SPY.
and July of 2021. You can see the selling that ensued after that level up around 420, 430 was unable to be breached. You can see the areas of consolidation that formed at lower and lower levels and limited retracement, right? That's what we talk about in terms of positioning yourself with the trend. The reason it's, well, there's a few, but one of the reasons why
barbecue probably come down a little bit
I like
more.
to
See if it holds
myself with the
15
trend is because
cents.
the market does the work for
If
you.
it's
and
retesting the
sometimes
breakout,
limiting the time
the gap
against
fill
you,
rather.
retracing,
Here's a
again,
SPY.
in a very well-defined trend environment like this, where you see top left corner to bottom right corner now, kind of zoning in on this area below 80,
see if that's a low on the day for the market.
because we get really tightly knit in here, right? So I didn't want to get at too fine-tooth comb, but what I did want to do is just take a quick look here as you kind of zoom in on
like
that
it might
area
be
again. Recently, since the
quite a
beginning
bit
of March,
volume.
you can see these areas of consolidation.
Buying it
Similar
up.
thing, you know, I like to look at the granular aspect of price activity, how these patterns that we see again on the more intraday time frames do reoccur on the bigger picture. And this again, not only in a trend environment to the downside on the
Maybe double
hourly,
bottom,
the
yeah.
more intraday, more intermediate since the beginning of March,
Close.
but going all the way back to those highs that we saw back in the spring of 2021, the summer of
Yeah,
2021.
market's
so
pushing
you
right
can
there.
see in this instance a trend environment that's well defined in multiple time frames. The bears here looking for new areas of value to continue to form at lower levels, and they've got areas that have been established on the way down to invalidate the working assumption the value is moving lower if it actually does start to move higher. So
pretty much.
it's pretty simple, pretty easy, clear example in this instance.
Yeah, no, so talking about trading this name here, Rick, walk us through what you're thinking, as well as some technicals, because I do think this name is compelling from a trading standpoint. How would you at least have this earnings been behind us?
Yeah, you guys said it was an ugly chart indeed, and it was looking a
green
little
candle on
bit
the
better
market
before
there.
we had earnings here. It was looking like we were perhaps on the verge of a breakout beyond both
Pain
our
for the
yellow
day is over.
21-day EMA and this downward sloping trend line. We were in more of a triangular pattern before earnings hit, but in a big bucket of cold water on the enthusiasm of the bulls here, we broke all the way from the top of our pattern to below the lower trend line there. So snapping a trend line that we've seen off those yearly lows near 41 all the way back in November. So pretty rough move here. We're also falling below the volume profile point of control near about the 4650 level.
Could be wrong though. I didn't think that was here.
Trading. And you can see look how bottom heavy the volume profile is. We can see that
Like
there's
how
some
front ran
acceptance of
that
these
support.
prices at this level. It
Like,
might be
no, we're not
tempting
gonna
to
get to
think
the
that
support.
means it could be bottoming out. I think that, you know,
For,
that's perhaps a
support right here,
dangerous
410.
assumption here. It doesn't seem like things are going too well. All indications seem to be that the trend
Making
is
an
still
inverse head
going
and
down.
shoulders.
All three of our moving averages trending downward and diverging farther apart from each other. The RSI in bearish oversold territory here after failing to crack above
back
that
up
50
to,
midline there. Perhaps
know,
that
maybe
was a
be
clue
well,
that
maybe
breakout
higher.
was
It's a Friday
perhaps
after
not
all.
to be, that we didn't break into the bullish side of the spectrum for this indicator here. So 44, this green dashed line, represents our old lows around that area from around December, so that could be a point to hold here. In terms of the trade that I looked at for this one, I tend to be a little bit more of aggressive trader, so I made a bit more of an aggressive example trade here. Instead of doing a spread or anything, I just did a trade where we are buying a put. So the 43 put, June 16th expiration, 35 days out for this one, paying 180 debit for it. And this is just a straight up bearish trade. Our break even comes in around 41.20, and that would take us right around the yearly lows. So basically this trade is expecting that we're going to make some new yearly lows in this name and continue further down on this downward sloping trajectory that we've been in for really quite a while here, at least the past quarter. So as I said, kind of the overall picture, all of our technical indicators are pointing more toward the bearish side. And conversely to our last trade, this is more of a hard target. We have to be right about our break even there. We have to get below that level, really break into those new yearly lows for this one to pay off for us.
Right, and of course, Rick, with this example trade, you do risk what you pay, so you risk about $180 with that 180 debit there. So thank you, as always, for all the technicals as well as some example trades. Rick Ducat, our chart master. It's also important to keep in mind, though, for our example trades today, that multiple legs can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO. We are looking at a move to the upside. Finally, we're talking First Solar up 23%. We'll discuss more what's driving shares higher coming up next.
All right, looking for a little consolidation around this 410 before we see further moves up. Our short play on Airbnb is working out. That's the thing with those spreads. You gotta get the timing. I gave myself until June. It's a really safe play. It's till June, and it's basically at the money. So now the spread, you're just waiting for time. I'm already in the money, and the profit will just come with that the short leg king in value. So that is the downside of spreads as opposed to just buying a put. However, I could just get another one further down at the money again. Barber coding around VWAP. Median pay for top US CEOs rose 7.7% to a record 22.3 million last year. Nearly 1/3 of nurses nationwide say they will likely leave nursing for another career due to the pandemic. I've heard this before from nurses. All the crap they had to deal with during COVID. People weren't allowed to go to the hospital unless it was like dire. They had a mess. A bunch of strung out people in the hospital and people, yeah. Musk says Linda will focus primarily on business operations. The housing market has started to recover, and this is a problem for the Fed. I mean, given it's cyclical also, like it's a little early, but I don't think this bounce is going to continue. Not with interest rates. Not with people living on credit card debt at all-time highs. No savings. Little bull flag setting up here on the SPY. Might not even get much of a test for that 410. Still kind of have an inverted head and shoulders here though. What? That gas is running? Look at you. Gas with a pop. Pop-a-doodle-doo. Biden orders border agents to let migrants in with no tracking or conditions, with next asylum court date in 2035. Live here on welfare for a number of years. No problem. 12 years. Have like 5 kids. We going back heavy into B Hill? Really? Get buying again, Huntery. I mean, it's got a gap here, man. I pump the brakes on it a little bit. Momentum's to the downside for now. There's a few stocks that look like this that I wanted to go long on, but I'm waiting. Carvana's one. You start to lose momentum, it's momentum to the downside. It's not just gonna start ripping again.
A clear outperformer, not only on the session, Ben, but really on the year. I mean, this chart is out of control. So before we really get into the technicals, I mean, this name is pacing for its highest close since September of 2008.
Absolutely, Jenny. I feel like we, unfortunately, with the broader market down, kind of started the show off on a bit of a somber note, but we finally get to kind of kick things into gear here and bring some energy and a positive vibe to your viewers here, because this stock has been taking off. And you were just talking about a challenging market. In these circumstances, I think investors and traders are kind of looking elsewhere for some alternative investments, and solar being one of them, right? When you look at energies and some of what we've seen in terms of crude oil, a little bit of a disappointment recently. Taking a look at alternative investments, not only solar, but for example, nitrogen. So some of these names have done very well in a higher conscious environment where we're talking about, right,
I'll pick some up here.
You know, global warming, and obviously higher consciousness in terms of your footprint on the environment. And you see a lot of homes shifting to this, not only in terms of that, but also cost savings as well as. So yeah, I mean, we're seeing the stock higher, significantly higher today, which I'm looking forward to talking about the charts here in just a minute. But it's not just today. I mean, this has been a well-defined trend.
Okay, there's that 410. See if SPY holds out
I think it's interesting that you mentioned the broader solar space, because I was actually looking at this name compared to the other solar stocks, and none even come close.
10,000 shares now, $1,500.
Right now, first
this
solar
one it was
268%. And I mean, look at that chart. That really was what caught my eye, because we talk about all this hype with the solar space, but why is that only benefiting First Solar? I mean, you look at other names like Solar Edge, up 40%.
Well, you're giving it more than faith. You're giving it your money.
Down 9.5%. Enphase up about 17.5%.
I'm not saying it's not going to keep going up. I'm saying I'm
just 270%
patient.
jump in First Solar. But the news we're seeing that's driving shares higher today is that they did announce acquiring Evolar for about $80 billion. $38 million was expected to be $30 billion is expected to be paid at closing, with an additional $42 million expected to be paid upon the achievement of certain technical milestones. Now, this is seen as really a move to boost its technological position in the solar energy space. Evolar is a European thin film company, and First Solar did say this marks the first time they will be having an R&D facility in Europe, with Evolar's lab in Sweden continuing to conduct this research activity. So this was clearly read as a very strong sign from the street. I mean, overwhelming response today, Ben, up 23%, but the stock is now trading at a premium, and I think it's difficult to argue with that. I mean, we've seen it really be a strong beneficiary from this Inflation Reduction Act. So I was reading a lot of the notes, analyst commentary today, and it seems like the overwhelming consensus is that shares have really benefited from the IRA, but have they run up too much too fast? And the outperformance in the overall solar space, I think, is again reason for concern, just when you have a stock that is up 51% on the year, up 272% from their 52-week low. So this one from a technical front is so exciting because it's so strong, but then does that sort of give you an air of caution?
Yeah, I think it does. I mean, that was quite the chart to look at.
This market's
First
so
of all,
weak.
relative to its peers
Selling
there.
any
And,
rally.
You know, it really speaks to some of the price activity I'm
Crazy.
going to break down here in just a minute. But, you know, I think this is a perfect example. Earlier in the show, we were talking about Twilio and the textbook example of a trend environment to the downside. Well, let's jump into the charts and begin with the one that we showed a minute ago in terms of that well-defined trend environment to the upside, because this is a textbook of the exact opposite of what we were talking about in terms of Twilio. Let's just begin with the more granular time frame for those who like to look at the more intraday, and then we can kind of work our way up into the bigger picture. You're going to see a similar pattern playing out throughout this discussion. 3 areas of consolidation that have formed here, and what I really want to highlight on this chart, and I think the takeaway here, Jenny, should be just understanding the 2 phases of development. You've got the overlapping rotational, where we're sideways, not a lot of conviction. It's just kind of random and limited, simply put, range bound. And then you get a high conviction phase where you break out to the upside, higher highs, higher lows. You go sideways again, you find a stopping price and kind of gain momentum or regain your breath ultimately. The market sort of regains composure, and then it regains that momentum to the upside. And you can see we're currently consolidating around 226 right now, a key area to keep an eye on. I did want to point out that it's not just the 5-minute time frame and that real big move up that we're seeing, spike up. This stock has been shining bright for a while. FSLR from the October lows, and a big move off those earnings back at the end of October last year, breaking them out of the balance that they were trading at around 130. You can see the areas of consolidation that formed to higher and higher levels. You can also see the big momentum to the upside after testing that key support around 173. It didn't take out that big area. It shows, again, the bulls that they're positioned in the right direction, and these candles, it really gives them something to share about. They're hoping to see a new area consolidation form at a higher level in conjunction with the trend that we've been seeing. They are subscribing to the theory that continuation is more likely than change, and we will get that with FSLR. I just wanted to take one more a step back here and look at this. I mean, we were just looking at the 5-minute, the 4-hour. Here, this chart, Jenny, goes all the way back to 2020 when the stock was trading around 46, and you can see in the same situation, a staircase type pattern to the upside, limited retracement in each one of those areas of consolidation.
You're an experienced investor or just getting started.
Oh, I'm talking about the data account. Yeah. I'm trying to use it as a theta farm. I've kind of been just holding that as cash. That's why I've been swing trading, using that for just swings with barbecue and other stocks. Jeez, look at the SPY, man. Just reverse, but then crazy sell pressure on the reversal. Thanks, Experience. Appreciate it, buddy. Have a good weekend. Oh man, you can just see these little peaks it's hitting. It's literally doing the same thing it did back here. Fiber coding.
Head into the end of the week, not what the bulls want to see, to say the least.
Right, no kidding. And I'd say, pessimism just seems to keep coming for this name, as we just got news they're laying off about 25% of their workforce. Also closing MTV News, which makes me feel very old and very sad. But here to tell us more now on some analyst news we got today, I'd like to welcome in George Tillis, senior markets correspondent for the network. So George, tell us your thoughts here, because it just seems like the bad news keeps coming for Paramount.
Look, I think you brought up a good example, MTV News. This is a situation where I think the linear TV business is one of the challenges that Paramount is facing. And if you look at the last revenue growth numbers in terms of what they developed, their Paramount Plus division actually grew considerably, added 4 million subscribers to 60 million, but they actually denoted 8% decline in sales, forgive me, in the traditional linear TV segments. And this includes things like, your CBS brands,
just repeating
your Nickelodeon, Comedy Central, and MTV, of course, which fits the bill in terms of linear television. And I think the elements behind Paramount's business, alongside some of the exorbitant charges the company took in the quarter, about $1.7 billion, they effectively have to deal with the balance sheet issues that they've got going on. I think there's too much competition now as well in the streaming business That's effectively perhaps slowing down the trajectory of growth that they expected for Paramount Plus. But at the same time, they've got all of these legacy expenses that they have to deal with, and they're starting to do that. They're dealing with that by cutting workforce, cutting back on of course, programming that isn't accretive to their business much anymore. While at the same time, again, you have to see the competition, which is growing. We even saw Disney demonstrate some challenges. That stock, for instance, is trading at around the 2015 levels. That's pretty hard to believe, but it is. Looking at Paramount over the last 5 years, it's also down. So, I mean, this is the old Viacom company, for those who don't know, that holds, of course, international broadcasting brands like CBS. But at the same time, they've got a great content catalog in the Paramount legacy business, but they have to cut expenses. And their debt levels, by the way, are quite large. They're about $16 billion of debt. That's been a drag on the company, while at the same time they had been paying a pretty generous dividend. And in fact, there were some questions about them cutting the dividend. They did it because they effectively have been bleeding cash. I mean, last quarter, free cash flow was negative $340 million. While at the same time, the company, like I said, took $1.7 billion in charges for the quarter because of expenses.
George, I think it's been really interesting to watch because when we first heard of all of these companies coming out, like Paramount Plus, Discovery Plus, Disney Plus, Apple TV Plus, you'd think they'd get more creative, honestly, with these names. And it was like, what does this mean for Netflix? But now it seems like, at least when you look at a chart, what does Netflix mean for everybody else? Because Netflix has been able to fare this difficult storm pretty well, and Paramount not looking so hot. Is that just because it still has that linear TV exposure? Like, do we just need to cut that out? But I also think there is a world where cable still absolutely exists.
Oh,
right?
and sorry, Batman, I missed that.
Yeah, absolutely, and that's a good point to bring up. Cable is not going anywhere, nor satellite television. It just comes down to expense growth versus revenue growth.
I've been messing with
linear television
Coin.
is still quite expensive. It's basically traditional.
Some of the banks, but that's
There's
sketchy.
a lot of middle tier payments that need to be made to local broadcast companies. Programming is very expensive. Distribution and advertising is expensive. And so if you look at the nonlinear aspects of, for instance, Netflix, they've been able to keep operating expenses low as a percent of sales, while sales effectively have been relatively stable. Now, Netflix had some challenges. There's no
really
doubt.
just finding stocks
Even if you look at Netflix over the
be
last
happy
5
owning,
years, it hasn't performed all that
looking
well.
at a chart.
So I think what we're seeing here is lots of competition.
Seeing,
I mean, effectively all
sell
the
put on
names
a red
that you
day
mentioned, you add it all
uptrend.
together, it's like a traditional cable
Most
bill.
ideal, of course.
But there are choices
Double
that people
bottom
have
rounds
now.
buy.
People can choose whether or not they want Paramount or Disney or the others because they can cut those out, versus a traditional cable bill, which is tough to choose in terms of what programming you want to see. So I think the traditional TV business is still expensive. I mean, ABC, as well as, of course, ESPN. This is the Disney broadcasts. These are under the Disney umbrella.
Yeah,
those
that's
have
true.
been
We
challenging businesses for Disney. I think that's one of the
those
reasons
things,
why they've been struggling.
Well, I'm moving
despite
down
the fact
here.
that Disney Plus, in terms of subscriber growth, has been rather robust. There are still some legacy expenses in the traditional linear TV elements of their core total business that needs to be addressed, and that's the case here for Paramount. They're trying to address them. I think the stock price,
you can get a lot of
around
tools
these
on our
levels
Discord.
looks interesting.
Under
Because
trading
they're at
tools.
some very low levels, but they're doing something with expenses. There's no doubt. But at the same time, you have to think about the appetite from a discretionary standpoint to maybe decide on where households are going to cut back. They might come down to choosing that small monthly subscription to things like Paramount Plus or even Netflix.
Absolutely, George. And I think that makes a difference. I always try to keep myself
Thanks,
on with
Ace.
what subscriptions I'm paying for because I hate wasting money. But I was recently watching cable, and I was thinking how terrible the commercials have gotten. I was like, no wonder everyone's cutting the cord. I mean, it was horrible, really, to watch, frankly, with all these long interruptions. But we will leave it there. Appreciate all of the insight, George Chill, senior markets correspondent. Ben, also appreciate all of your insight today, filling in on a Friday. I hope everyone has a wonderful weekend. That also does it for Ben and myself for Next Gen Investing. Coming up next, we have the watch list with Nicole Petalides.
There's a SPY flushing some more. Boy. There's 16 cents. Give us all $1 million. High new low of the day, 409.10.
$33,142. The NASDAQ down 124 points at 13,265, and the Russell down 0.75% at a level of 1731. It's worth denoting the U.S. dollar best week since February, and Bitcoin, on the other hand, worst week since last November. For some of the biggest stories in the markets, we welcome in Kevin Green, senior markets correspondent on the TD Ameritrade Network, to tell us some of the latest news pertaining to Elon Musk and Twitter.
So Elon Musk has announced a new CEO for Twitter on Twitter a couple of hours ago here. We have actually Linda Yaccarino. She is going to be taking over the CEO spot. Now, Elon Musk is still going to be really focusing on the product design side of the business, as well as new technology that's brought onto the platform. But Linda will focus mainly on business operations, and she's actually an NBC Universal advertising executive, which is something that's going to be key for Twitter as Elon tries to monetize that business. It's been an issue when it comes to advertising, and she has been able to expand the advertising brand for NBC Universal for a fair amount of time here. So this is a very exciting time when it comes to Twitter, and not only for Twitter, but also for Tesla. When the news broke yesterday afternoon, Nicole, during the after-hour session, Tesla did jump about $2.50 on this news. Now, it is down with the broader market today, but maybe this relieves a little bit of pressure for Tesla investors that were concerned that Elon's focus was split between SpaceX, Tesla, and also Twitter, and so maybe that focus can be, there can be a refocus when it comes to Tesla and SpaceX. So that's the hope for a lot of long-term investors for Tesla.
Yeah, without a doubt. I was looking to see, I know you said it popped yesterday, and even Dana Ives was very positive on the idea that he can now focus more on Tesla. But for the week, I'm looking, Tesla is down about 1.5%. So what's the news coming from Washington? President Joe Biden made a series of nominations for the Fed today. What's our takeaway there?
Yeah, a fair amount of shakeups, just to say the least here. First and foremost, President Biden is actually going to nominate Philip Jefferson to the Fed as Fed VP, so he would be second in line to Chairman Powell, and also succeeding Lael Brainerd, who actually took up the Director of National Economic Council a couple of months ago. Additionally, he plans to nominate Adriana Kugler as Fed governor, and also nominating Lisa Cook to a full 14-year term, as her current term expires in January. So a fair amount of shakeups when it comes to the Fed. Let's see about the nomination process and if it's able to get through Congress, or basically Senate, as we are also working on a debt ceiling issue, among some other issues in the administration.
Yeah, without a doubt, and that is certainly a big one, and that meeting was delayed as they try to get some more concrete thoughts together before they have the meeting, apparently. All right, Kevin Green, thank you. Let's get the bigger picture. Ross Brown was with us, principal at Hallmark Berg. Thank you for being with us. Tell us a little bit about what your takeaway was from the inflation data that we received this week, CPI and PPI.
Well, really what I'm seeing from the inflation report is that it was better than feared, right? It only went from 5% to 4.9% on the headline, which really isn't much of a move. I think if we are going to be sticky within that 4 to 5% range, I think it's going to be hard for the Fed to justify any rate cuts. And I think although a pause is justified, I don't think it's necessarily a guarantee. Over the next month, we're still going to get another jobs report, and we're also going to get more inflation data before the next meeting. So I don't think it's said and done that we're necessarily, rates are off the table. But at this point, I think inflation is on the trend down. But the Fed really wants to see core CPI, not just headline CPI come off the peaks. And core has really been sticky the last 2 or 3 months.
Right, understood, and that's the whole part of it. So while people are predicting the Fed will likely pause,
I'm sure you're going to see $1 billion volume in OTC.
I mean, they're even saying cut at the end of the year. I mean, what do you think they'll probably do? You think they said they'll likely pause, but what does that mean for inflation? Well, them, because disinflation takes too long. It's taking too long for inflation to come back down.
It is. I think the Fed is likely to pause, but I think right now where the markets are predicting maybe an 80% chance of a cut by September, or maybe the Fed funds will be down, 0.75% by the year end. I think it's a little too early to start pricing in the cuts. I mean, if you look historically, the Fed, if you go back over the last 50 years or so, the Fed has cut probably about 120, 125 times. But only a handful of those have they ever cut rates when unemployment is below 4%. Only about 20 times or so have they ever cut the Fed funds rate when unemployment is below 5%. So right now, with the market this tight, or the job market is this tight, I think the Fed is going to have to wait till they actually see some real cracks in employment before they start thinking about cuts. I think it's likely they're going to pause, but I think bank tightening and other things will continue to keep the economy in restrictive territory.
Right, and that's the whole thing. If you have a credit crunch, we have the uncertainty of some of the regional banks. You have the debt ceiling looming, and that really can crush the economy quickly, right? If things aren't to shape up a little bit. Tell me any final thoughts there before we get to some of the sectors.
Yeah, I think headline would be bank tightening. I think it's going to make it difficult for the market to avoid trouble in 2023.
My order never got filled through here. I just noticed.
Loan officer survey that banks are quickly tightening their lending conditions and kind of reducing the available credit to consumers, businesses, and we're just in the early innings, around commercial real estate. And so even if the markets want to cheer, a Fed pause, we're still going to be in restrictive territory, I would think. And the reason that's important is bank tightening typically has been an indicator of future job losses and economic weaknesses. If you look at small business data, it's been about a 2-quarter lag. But right now we're in the spring of 2023, heading into the summer.
Yeah, I was trying to pick up some here. Just a little entry.
Fall, winter, early 2024. If we're just seeing
cracks
now
in
employment, I'm expecting to see even more pressure on the job market later this year.
Right,
have a little exposure over the weekend.
Get through, if there's going to be more pressure pretty much across the board on the job market, the concerns about a recession, what sectors do you think are best bets?
Well, really right now, I don't think necessarily that the market should cheer a pause. And if you look historically, rate cuts haven't been very good for the market either. So we are staying exposed, but we would want to be diversified and actually probably be postured a little bit more defensively. So I would look for consumer staples or healthcare. Both of these sectors have tended to do well during a pause after the last rate hike, but they also tend to outperform once the Fed initiates the first cut to the last cut. If you're going back over history, they've outperformed, 16 and 14% respectively. So given that we are expecting a higher chance of recession and that we're going to see continued slowdown, we would kind of look to put new money to work on the defensive side.
Right, understood. So the defensive names, when we think of those sectors, I mean, we think
upside's 30 cents.
Healthcare as one. Staples are usually a go-to, even utilities. Where do you stand on these kinds of sectors?
Maybe fill that next week.
Yeah, I think anything. Looking big picture, right? We want to stay diversified. I wouldn't go out on a limb and start picking maybe individual names, kind of go with the sector exposure, but really kind of fundamentally, I'd stay with kind of the high quality wrapper. Anything that is paying a dividend, is able to grow their dividends, anything that's low debt, I would want to stick with positive earners, really that kind of has that high quality because we expect the economic conditions to deteriorate.
Right, understood. So more going for the sectors as opposed to specific names. On the other side of the coin, or you brought up the regional banks earlier. Is there a group that you would avoid
we fill all the gaps to the downside.
Less defensive, more sort of more risky, too risky for right now.
Yeah, really anything would be more on the cyclical side, right? I mean, going into recession, small caps tend to get hurt first, right? Small caps tend to outperform coming out of it, right? So you may want to put yourself a little bit more, less on the cyclicals, a little bit more on the defensive. Hey, cash is going to mean something for companies. We're expecting to see lower demand, right? We're expecting to see some real estate weakness, right? So companies that have that strong balance sheet, have that cash, I think they're going to outperform over the short term.
No, I didn't actually buy on the gap, Phil.
Ross
I just
Romo,
watched it.
Thank you so much.
Had a nice bounce out of there.
Good to see you. Appreciate it.
I wasn't sure that's how it would play out, but sure enough. Had the volume coming in there, so same volume, pulled it back out.
Earnings report, the shares jumping big time, up 30% this week. Let's get some details.
Got kind of this little pennant forming.
Ross Rober will drop by with his latest insights into what's going on with the moves by Elon Musk, what it means
about to
for
break
Twitter,
out.
Tesla, and a whole lot more. And our panel previews some of next week's earnings, including Home Depot, Walmart, Dollar General. Looking forward to that. And up next, we will gauge the current mindset of the market and get a few stock picks for you. Our friends over at Strategic Wealth Partners standing by.
Was I looking for 11s? No, I wasn't necessarily going to be dip buying. But yeah, I told you guys if you want to dip buy, gap fill would be the target. Powerful barbecue. Why an intraday move? Was this like 30% down today at one point? 27%? 29? Yeah, basically 30% down. And then a 20% retracement. Nice, coming down here a bit. Let's call the banks. Like, just these mega caps. Yeah, see, all the mega caps are not holding it up today. That's literally all it is. Like, they're usually just propping the market up heavy, and they're all down today. And Nvidia's down. Gonna hold on.
To cut spending by about $300 million in 2023. The Wall Street Journal says the streaming giant is looking for fresh savings after delaying its password sharing crackdown. Netflix reportedly isn't considering hiring freezes or layoffs yet. Twilio lower today. The analysts over at Mizuho
Man, this guy's passing the flush some more.
From buy and lowering the price target to $55 from $90. The analyst remains positive on Twilio leadership for the long term, but does not see any near-term catalyst.
That divergence is still there, but
to go higher. And then there's
the support I was looking for them. That was the lowest support we had, 408.98.
The analyst over at JP Morgan today cutting the price target to 175 from 205. The analyst reducing his earnings forecast and saying risk reward is perceived to be more balanced in the 150 range. So our panel standing by will take a look at Target, Walmart, Home Depot, some of the names that are on the slate for next week. And then here's a look at Bitcoin. Now, Bitcoin, as I said, worst week since November. You do see down arrows here today, down 1.8% at 26,360. We will be right back. The watch list. Stay with us.
Is this? New low of the day on SPY there. Bernie Sanders doubled his income last year by writing a best-selling book that condemns capitalism. White House staff will meet over the weekend on a debt ceiling. little cup and handle here. 4 hour.
$11, so I gotta love it at $7, right?
I did pick up a
So
few shares there.
it's down almost
scaling a little bit
30%
today.
on no bad news, and I feel like it's getting caught up in that small cap, high beta sell-off. But they always seem to have, you know, a good story. They're a great
The dip probably
long-term
would have been
growth
nicer, but
story,
oh well.
especially as it fits the narrative as
We'll
we
see if
move
this
from
holds up.
gas-powered cars to EVs.
End
And
of day.
they're picking up market share with their fire insulation product that helps prevent battery fires in these EVs. Their biggest customers are GM and Toyota, and they just won a large contract with a German automaker. So they always seem to have positive news, and they have a lot of contracts lined up. They got a good backlog of work. They're building a second factory, and they have minimal debt for a small cap company. So checks off a lot of box there, especially if you're looking for a kind of a small cap growth company.
Yeah, so I mean, you know, I like how you note that it's pulled back some, but that you still love it. You love it at these levels, at $7.50 today. And really, you know, manufacturers, the materials that are used in the energy and industrial areas. Do you like any of the other areas? For example, solar is doing well today. Some people love EVs now that Musk is, you know, passing off Twitter. Are there any other sort of sectors or anything that you like?
I mean, I would look for, you know, as the narrative moves from, you know, fossil fuels to green energy.
I don't think there's any difference
you know,
taxes
nuclear
as far
power
as RTC goes.
Yeah, that seems to be a good entry point, especially if you're looking like one ETF that I know we own is the uranium miners. You know, we like that because it's undervalued at this time, and again, as the narrative changes from fossil to green energy, that's a derivative play.
Yeah. Tell me this. I mean, with the debt ceiling, because you did mention the headwinds, just, you know, what do you think here with the debt ceiling? I mean, we go back to 2011, and we had a downgrade by Standard & Poor's, and when the market dropped 10%. You know, I don't like to be a workday type of person, but more and more people keep talking about it.
Yeah, well, there's not much news going on right now, so the debt ceiling happens to be the biggest, elephant in the room. But I mean, they met earlier this week, and both sides, reiterated their stance, but there was no compromise and no mutual solution. Now they punted to next week for their next meeting, where I expect still nothing to happen. Now, over the last 40 years, we've hit the debt ceiling 45 times, and normally there's little to no market disruption. You just mentioned 2011, the market was down like 15% plus or minus. Yeah. Now, is this time different? I don't know. We racked up $9 trillion in debt in the last 3 years. So my biggest concern is if they don't figure this out, the U.S. dollar loses its intrinsic value. Repercussions can be credit downgrades, borrowing costs go up, consumer confidence drops. And all of this sounds like we're printing more money, which is more inflation, which is just fighting the Fed's work to this point. I hope they figure something out, because there's a lot of bad things that can happen if they don't.
I saw since 1960 that the debt ceiling was somehow raised, changed, adjusted like 78 times or something, which brings me some relief that they will do something as opposed to just, defaulting. Tony Zabigala, great to see you, Strategic Wealth Partners. Thank you so much for being on the show today, Tony. Okay, coming up, the CEO of Xometry. The company's AI platform connects manufacturing supply chains across the globe. The stock has jumped this week. We'll find out more about this. We'll be right back on.
All right, I think the SPY actually has bottomed here. That RSI divergence is holding. I don't know if we're going to make a big enough rally today for me to recoup my losses, but I think we'll probably end with an engulfing candle, which is bearish into next week. Oh no, Yin Yang. I don't know, market's looking pretty weak. You probably missed your best exit. Well, you might get a bounce next week, but Tesla's even given an engulfing candle too. Basically filled its gap also, which is what we're waiting for. Will expire next week? Yeah, you should sell them on a bounce today probably then. Be a little bounce maybe starting now. Barbecue. I'm still waiting to get the rest filled here. Oh, those got filled. Got some of my other account to get filled. And might pick up some more end of day if we do get a double bottom. I wants to rally, but man, it's a lot of selling pressure today. It literally didn't even make it to VWAP all day after drop below it. Kind of crazy.
Leading medical devices. So these are industries that are growing rapidly, that need supply chains. And just to what you're talking about, with all these sort of crazy events that have gone on in the last few years and concerns about geopolitical tensions, people are thinking about how do I make my supply chain resilient? How do I protect it? Because in the end, I have to deliver my goods to my end customer, and the Xometry marketplace is a perfect way to help make that happen.
Tell me about the revenue growth that you recently reported and
cup
the
and handle
outlook
now?
as well. I mean, what's driving it and what do you see going forward?
Yeah, and as mentioned, we grew year over year in first quarter over 26%. It was a record revenue quarter for Xometry, and it was ahead of expectations. Our gross profit also increased ahead of expectations, and that was largely fueled by our growth in our marketplace, our key segment, which accelerated in growth 35% year over year from our 32% in Q4. And we saw a record number of active buyers, over 44,000 sort of embrace Xometry. So very exciting as we gain market share. And likewise, international was a particularly strong growth point for us. On an FX basis, neutral basis, we grew over 87%. So that was very strong as well.
Right, understood. And at this point now, first of all, the stock is incredible this week. It's up almost 30%. I'm not sure if you were surprised or not to see a move like this based on you reporting your numbers, and your customers must be wowed as well, but they work with you all the time.
Yeah, we're thrilled, and we work with some of the largest companies in the world we're proud to have as customers across a wide range of industries. And then we also work with some small companies that people have never heard of that are making some amazing things as well. So we're very happy here with our mission. We're very blessed with our customers and our suppliers. And, when you think about the critical importance of supply chain, our mission is to help to solidify that, make it better for both sides of the market, and we're marching ahead.
All right. Thank you so much. It's great to see you, Randy Altschuler, CEO of Xometry. Thank you. Still ahead in the second half of our show, Ross Gerber is standing by. We will discuss Twitter, Tesla, Elon Musk.
U.S. Treasury said last week it will launch a program for buying back government securities sometime next year, the first time since 2000. The move intended to ease liquidity in the roughly $24 trillion market at the center of the global financial system. Get that. It's not ready to rally. Gotta wait for power hour, I suppose.
Today, though, down almost 0.9%. So can it squeeze out that winning week? Right now, 0.04% winning week for NASDAQ. We'll see. The S&P 4104, that is down more than 0.5%. The Dow is at 33,139. That's down 0.5%. And the Russell, the small caps, have had a hard time. That's down 11 right now. Taking a look here at the other movers, I mean, I think oil's an interesting story, sitting at $70 US. Best week since February. I mean, I got to say 102. Haven't said 102 in a long time. Gold futures holding well above 2,000 troy ounce, but I will note it is for the week a down week for gold in the third session in a row that we are seeing selling in this Bitcoin trade here, 26,370. By the way, Coinbase is down over 3% today too, if you're watching that. Tough week for Bitcoin, worst since November, which was the FTX fallout. Okay, Ross Kerber is with us to talk about the story du jour, big time. President CEO of Gerber Kawasaki Wealth and Investment Management. Your friend Elon Musk broke some news last night. New CEO for Twitter. What are you thinking here?
Oh, man, I was so excited, Nicole. I mean, I've been pushing for this since day one of when he took over Twitter. And not only did he find a CEO, he found a great CEO. And like, what a coup for, Twitter to steal NBCU's, top head of advertising. And, she's just an excellent, executive and I think will be incredibly complementary to Elon's skill set and is exactly the type of person he needs to get not only advertisers back to Twitter, but give him more time to focus on Tesla as it goes through this crucially important time for the company.
Yeah, Linda Yaccarino is her name. And yesterday there was a she reference, and today he confirmed that this is who the new CEO will be. So I guess we got to wait a month plus until she actually takes over the role. But as you said, you were pretty happy about it. And I think that was a reflection of all Tesla shareholders, because we did see Tesla move higher, though today it's pulling back. We know that he's also raising prices on Tesla. What does this mean for Tesla? Where do you think, you always were a Tesla fan and an Elon Musk fan. Do you see Tesla going higher from the current levels? It's at 167 today. Where is it headed and why?
Well, I think Tesla's story is a little bit less about Elon having a little bit more time with Tesla and a little bit more about the fact that they started raising prices in the car, and where the car price goes, so goes the stock. So if Elon continues to have to lower the car prices and margins, the stock can't go higher. And if Elon's able to keep prices steady or even increase prices, that gives a bottom in pricing for Teslas and margins, and it gives investors, I think, a little bit more confidence to buy the stock that they're not going to miss earnings over the next several quarters. But ultimately, the main catalyst for Tesla is launching a new product, and that's the Cybertruck. And the sooner that happens, the better. And that's what all eyes are on for Tesla.
Yeah. I mean, what do you think about the back and forth of lowering the prices, raising the prices? When does that become frustrating for shoppers?
Well, it became frustrating for shoppers the first day he lowered the prices, because he lowered them dramatically after a lot of people bought cars in Q4. And many of them, new Tesla customers, felt very burned by such a dramatic drop in pricing. But also this idea that we want to sell cars in the dynamic pricing model, like airline tickets or hotel rooms or concert tickets. This is not, I think, a great way to sell cars, because consumers are sort of whiplashed with prices, and consumers are sort of used to car prices being somewhat stable for a car. And, I don't like this idea.
By the way, I'm looking at the price changes. The first part, the handle, right, for the most part is staying the same. I mean, it may be $1,000 difference on the biggest vehicle. The Model X Plaid went from, now it's 108 versus 107,000. I mean, big deal. The other ones were in the same range. You're talking dollars,
Spy
less
coming
than
down more here.
$500 difference. It almost seems kooky to go back and forth like that, and it does squeeze margins when he does that. I mean, you almost wonder why he did it in the first place. Whatever.
Correct.
Anyhow, I mean, when you think about, I mean, you really have to wonder why he did it in the first place, because, I mean, it's very much my understanding from speaking with you and so many analysts that Tesla is still the front runner. You have other competitors. You could say Ford and GM. You could say BYD. You could say Volkswagen and whatever other company that's like the up-and-comer or the Chinese competitors. But they're just not pumping out the vehicles in the same way. So does Tesla hold the leading spot, especially because they're making batteries, and it just seems like they are the front runner for some extended period now going forward.
Yeah. And like a lot of businesses like that have the dominant position that Tesla has, which I compare to Apple, maintain margins no matter what. And, you know, everybody, when Apple raised prices on the phones over $1,000, a lot of people thought they wouldn't pay for this, you know. But what we do is we see new phones every year for $1,000, and they're not that different, but it's a new phone every year. And that's what Tesla needs to do with their cars as well. But they need to maintain a margin and say 20% auto margins is where we're stopping no matter what. And if we can't sell the car at this margin, then that's just too bad, you know. And now they're using other methods to create demand. See, before, Tesla was always able to fulfill demand because the supply-demand imbalance was so much. But now with competitors and Tesla's volume so high that they actually need to create demand. And I think that's still a reality that Tesla's like grappling with. And they did a couple things this week, which I think are great. But you can't keep changing the price of a car constantly. Set the margin in at 20% and lower the prices if your costs dramatically decline. But other than that, it just seems like a very confusing pricing system.
Yeah, I mean, it just seems wild that he went back and forth. So the Cybertruck, do you have a date when that's coming out, when we should expect to see that with our eyes?
Well, they said this year, so my guess is 11:59 on New Year's Eve. We're going to see the Cybertruck, you know.
Yeah, okay.
But
we'll see about that. I mean, Rivian came out. There's a lot of excitement pertaining to Rivian's pickup truck. People like it a lot, but I mean, on the scale of it, it's you know, minutia versus Tesla. I mean, they're talking about what, 50,000 units for Rivian by the end of the year, something like that, right? Do they meet that?
It is. And it is a niche market because the car does price, let's say 90, 100,000 or above. So they're really focusing on the mass affluent or higher end consumer, which Tesla is sort of seeding now, focusing on the mid and lower end EV mass sales. That said, Rivian is the most sought after EV here in Los Angeles now. It is not a Tesla. Teslas are everywhere, and they're almost like looking at Fords now. So a lot of people are really liking the Rivians because they're seeing them on the road. They're beautiful cars.
Did you just say it is the most sought after vehicle, not a Tesla? It's a Rivian that everybody wants?
Yeah,
well,
they want
this is a game changer now. This is a game changer. That's a game changer.
Everybody has a Tesla. There's so many Teslas. You get on the road, it's every other car. So it's like you see a Rivian, it has.
Are you a buyer? Would you buy Rivian stock here?
No, we're not owners of Rivian here. I love the company, but they're not yet at a point where I'm comfortable with their business model. So we'll see how they do over the next couple months in ramping production and lowering costs. But the brand is excellent, and I think there's an opportunity in here if Rivian can get their operations correct.
I mean, when you think about PE ratios, Tesla is like astronomical compared to all the other automakers, right?
Well, it's not an automaker. I compare it to Microsoft and Apple, and it's still higher than Microsoft, you know. So Tesla trades at 40 times earnings. Microsoft trades more like 30, and Apple at like 28, and Google's at 25. So Tesla does trade at a very premium multiple in the market.
Yeah, but what is GM and Ford trading at? I know, okay, it's not an automaker, but I mean, you look at PE ratios, I'm sure it's under 20 or something, right?
Yeah, they're like 5, you know.
So there you go.
Like, there's no,
okay, so there you go.
Yeah.
Right.
But these are companies like that have serious issues, you know.
Yeah. Yeah. Let me ask you this. So I know you and Hatem Diab, talk about these, and you're both so great to come on the network, Ross. I'm so glad you're able to come on today, because one of the things that we talked about in the last investor day of Tesla was, while I was waiting to hear more about the Cybertruck, you guys were very focused on the bench. Who would be there in case Elon Musk was busy. And he did a good job of showing the leaders. I don't know if they were successors to him. What if he announces a CEO for Tesla? I mean, he's got a CEO for Twitter now. What stops him? What is that, the chief twit or something? What does he call, whatever he calls himself? I mean, are we going to have a chief EV maker, for, maybe he'll step aside.
IP kept going today, huh? 8%.
Of course anything's possible, but I saw this move with Twitter is really so that he can refocus a little bit more time on Tesla. But I think Tesla is the most consequential business that he's focused on and has the most direct impact in helping humanity with climate change being such a main issue, and it is such a big part of his net worth, and his compensation is so tied to Tesla. I just don't see anybody being a better CEO for Tesla than Elon, and I don't want that. I want him to be CEO of Tesla. I think there's just a lot of rumor in the market, but I think he isn't going anywhere, and I think that's what I hope.
By the way, I have to give you kudos. You called it. You called it when he was going to take over Tesla. You stuck to Twitter. You called it when everybody said, no, it's not going to happen. Remember, it was like the 5420. I mean, I really got to dig back into my brain here because I was standing at the post. But you stood by it, and you said, no, he plans on doing this. Is what he plans on doing. And he did it. He made his moves. Found a new CEO, which is also, what you said you wanted him to do, and here he is back at Tesla. So I don't know. Do you have a crystal globe or something? What's next?
No,
Ross? All right,
no, I'm a big pain in their butt. I'm a big pain in their butt, and I tell them what I want. And they listen to some degree. So I'll take it.
We know you want him to stay. You want him to stay at Tesla. So
I want Tesla to be wildly successful as they have been. Continue to be.
Ross Gerber, thank you so much. President and CEO.
Thanks for having me.
Wealth and Investment Management. Great to see you, Ross. Thanks. Still
He's
ahead,
probably got full-on ban in his living room.
Retailers due out next week, right? We're going to focus on Walmart and Target and Dollar General, a whole lot more coming up.
U.S. import prices fell 4.8% over the last year. Largest year-over-year decline since May 2020. Barba coating still 1610, down 15%. Looking to maybe grow some legs here for hour. Michigan long-term inflation expectations highest since 2011. Online prices fell for the 8th straight month from a year earlier, falling 1.8% in April from the previous year. Since 2000, Social Security benefits have lost 36% of their buying power.
Very good at that. And the other thing I think in the near term, aside from the valuation being attractive, is that they're investing in what they're good at. I mean, they're making investments in automation to keep their cost structure low. And if your cost structure is low, your prices can be low. And again, one of the things they've been doing that the street has liked is they've been winning customers who make more than $100,000 a year as they look for ways to make ends meet.
Right, right. I mean, there has been a lot of talk about some newer customers. They use the phrase trading down, but it's not necessarily a great phrase, but that's what it is. They're going maybe from Whole Foods and they're going to Walmart. Tell me more, Dia, as we take a look at this group. Inflation's still very sticky. What is it that you're watching, or what stands out to you broadly when it comes to the retail earnings for next week?
Sure. Hi, good afternoon. Thanks for having me. Yes, I think this latest round of earnings will be better than last year. Last year, as we know, was very difficult for a lot of the big box and other retail names, and that really had to do with the supply chain, cost structure. I think this year we're looking at a different set of challenges. I think obviously the consumer will be softer. I think with inflation and rising interest rates, confidence is lower, savings are lower. So we are expecting that to be weaker potentially. At the same time, we do feel like companies are doing a good job this year navigating that, managing expectations. So we don't expect big surprises next week. And if you remember at this time last spring, we actually did have a lot of surprises. It was a very dynamic environment at that time.
Yeah, sometimes we look at the comps. I mean, Airbnb, for example, had some very tough comps. There was so much pent-up demand. Everybody was running out. They didn't want to necessarily get on planes and travel all over the world, but they had really tough comps year over year. I will say, Chris, that in the meantime, we have lowered expectations, and so a lot of the earnings have been a beat in this latest quarter, you know, sort of not as
Well, I mean, now we don't have the same store sales except for Costco, so we rely a lot on the government numbers from the Commerce Department, and you know the numbers haven't been too bad. Of course, there's a lot of inflation built into there, and I mean, it looks like it's probably going to be tougher for the more discretionary, big ticket retailers than it is for Walmart. I mean, Target to stock I like because I think they make it easy to shop. They've taken care of their customers. But I mean, one of the questions for Target is, did they make up enough on, you know, the food and staples to offset, you know, where they probably saw pressure on discretionary merchandise like some of the apparel and patio furniture, and things like that.
Now, Home Depot, you have a buy rating, Chris. We already mentioned buy rating on Walmart. Where do you stand on Target as far as your rating there? And I know you recently have an upgrade on Dollar General, which I'd like to hear about. Dollar General and Target.
Yeah, so I'm a buy. I'm a buy on Target. I think one of the questions we always ask in retail is if somebody's out of favor, are they out of favor because they disappointed their customers or did, something to alienate them? And I don't think they did. I think they have a higher discretionary mix than Walmart. They got hurt, and you can't blame them. Last year they were chasing inventories, and then there was a very quick pivot. Dollar General was a recent upgrade. Like Target, they've been reclassified as a consumer staple stock rather than a consumer discretionary. They were close to my valuation target, so I think the valuation was attractive on Dollar General. But one of the things that stands out there is for consumer staples investors are always asking us, what do you have as consumer staples names with some top line visibility? Because some of the companies are so slow growing. And, with Dollar General adding store space, we think they fit the bill.
Yeah. Gia, you see improvement going forward. Tell us more about that and why.
Yeah, I think big box, especially even into the holiday, I think department stores, a lot of them just had mixed results. And what we've generally heard is, to Chris and your points, that the trade down has been very beneficial, especially in areas like grocery. We have heard that mix shift by the companies themselves towards the categories that people want post-pandemic has paid off. So pivots in apparel and various other home merchandising, understanding that people are looking to spend more on outside the home and entertainment and leisure categories. So the companies seem to be meeting customers' needs better this year and matching up their inventory quicker to get them what they want.
Yeah, especially as you said, as we have an improved supply chain. Dia Iyer, S&P Global Ratings, Chris Graja of Argus Research. Thank you both. Good to see you. Thank you, friends, for being with me. I'm Nicole Petalides. Every single weekday, 11 a.m. and 2 p.m. Eastern Time, right here on the TD Ameritrade Network. The Dow's down 140. Keep it right
Kind of
here.
rejecting that 410. That's interesting.
Next.
We'll get the full bounce to VWAP before close, or if that's it. Not even power hour yet. RSI divergence is playing out just very slowly. Started right here. Kind of made a new low, but still pattern. Yeah, barber coating. Still barber coating. Yeah, it's nice to get that gap out of the way. That is true. And rest a little easier. 4-hour aged.
With Silicon Valley Bank crashing, the dollar got hit as bond yields dropped. Look at the 10-year yield, and you'll see the big drop-off in the first couple of weeks of March. What the market did was take the regional bank scare and project out, based on that, a different path for the Fed than what the Fed has actually told us they want to do, which is just to maybe pause. The market's been pricing in cuts. So those two big red candles there on the right side, this is a 3-year chart of the 10-year yield. I'm going to explain why it shows a longer-term picture in a moment. But focus here on that little plateau up there that's been basically the year-to-date chart. We dropped off from the second lowest peak there around Silicon Valley Bank, those two big red candles, because the bond market rallied. It was scared about what the regional banks meant, and pretty much every economist and guest said that it was going to create a major credit contraction. Now, here's the catch. There hasn't really been much of a credit contraction. The data has generally been softening. Employment data's softened, but credit spreads haven't blown out. There's been a little bit of tightening of loans, but not that much. Nothing crisis level, nothing that would stop necessarily the Fed in its tracks, especially when you consider the other economic data linked to inflation, which has actually still remained problematic. Maybe not the CPI or PPI. They didn't beat expectations. They were a little bit cool, but the numbers are still high. And the overall issue here hasn't really changed. Consumer sentiment today showed a much stickier inflation expectations than what the Fed wants. Go back to that chart real quick, because I want to point out why I'm looking at the 3-year. That's Tesla. Let's look at the 10-year for a sec, because there's a very important point here. The 10-year has never spent this much time stuck at a single level. Okay, so now back to the plateau. We're at 3.5, and we've basically been there. Each of those candles is a weekly candle. 3, 6, 8 weeks. 8 weeks, the 10-year yield has touched 3.5 at some point. Look at the 3-year chart. There is no other period in which you go 8 weeks at the same level. Now, you could go back to earlier this year, and yes, we were down at 3.5 a few other times, but only for a couple weeks. It's been 8 weeks, 2 months. The 10-year yield hasn't moved. And since then, we've generally seen economic data soften on employment. We actually did get a cooler than expected inflation print for the CPI. We've also had a couple more regional bank scares, and a lot of people would tell you that we should be worried about the debt ceiling. But the 10-year yield has been able to hold 3.5, and you can kind of look at this as a Rorschach test, where you could say, well, the 10-year yield is still near the lows of the past couple months. But actually, I would argue that for the regional bank scares, the debt ceiling worry, the general slowness in the economy, the fact that earnings are contracting, you probably would expect the 10-year yield to be going down, but it's not. I think that's probably because there has been a major miscalculation by the market here about what the Fed is likely to do in their expectation for cuts. We're going to spend a good bit of time talking about that here today, because I think it's the most important story. Right now, let's check out some stock stuff. Now let's talk some Tesla. High beta stocks are under some pressure today. You're seeing a little slippage in some of the leaders. Nothing alarming just yet. And generally, big cap tech keeps coming to save the day. But the fade in Tesla today is pretty interesting, because I do think that actually I've kind of been proven right here to an extent. Because the last 48 hours, I was owning up to being wrong. Because my point has been, I think that the whole narrative that Elon's role at Tesla, or at Twitter, has been detracting from his role at Tesla. Ross Gerber and a lot of other folks have argued, Dan Ives too, that Tesla's been under pressure as a stock and underperforming because Elon's been distracted with Twitter. I haven't really bought that argument. I think the guy can handle it. And yesterday I took, I owned up to it when the stock rallied, and this morning I said the same thing. I said, okay, I guess I was wrong because Tesla's rallying now that Elon's leaving Twitter, but guess what? It faded down. So maybe I was right. I think if it's the case, it's really important, because it's a really important stock still. And if Elon leaving Twitter is not the solution to Tesla's problems, then it probably means we need to spend a lot more time focusing about the slowdown in demand, the fact that they've had to cut prices, then bring them back, not able to figure out exactly where the customer demand is right now. So Tesla slipping today, I think, is a pretty important fade, especially when you consider that it's alongside the rest of consumer stocks after that sentiment print that showed sticky inflation, but dropping sentiment. That's kind of like a stagflation situation. Let's bring in Kevin Hanks, host of Fast Market. Look, Kev, it's easy to get excited, I guess, when we finally got a little tiny bit of volatility creeping up, and I don't want to get carried away with it, but does that consumer sentiment print from today affect the conversation from this week?
Well, I think the consumer sentiment print that we got about 9 o'clock this morning certainly threw a little bit of a wrench in the theory that everything was calm and that the consumer was going to keep showing up, especially going into the second half of earnings season, which is heavily retail. As you know, we're getting a lot of retailers next week. So traffic out of that U.S. consumer is probably going to be fairly important. A dropping U.S. consumer may not affect this past quarter because the numbers were actually drifting higher, but how does that affect their guidance going forward? If we've learned anything the last few weeks, guidance is important in a lot of these names because stocks, traders look forward on names, not so much at the numbers that they've already put out. So I think that's one thing. I think the overall sentiment coming out of this week was calm. It's a little less calm now, I would say, going into the end of the week. This is certainly a stumble. I think if you look at the Tesla news that you just discussed, this is a kind of counter what you would think would happen in Tesla. You would think this is freeing up Elon Musk, although how detached do you honestly feel he's going to be from Twitter? I think he hired someone to focus on advertising and revenue. I think that's pretty intelligent, but I still expect him to be heavily involved in Twitter, Oliver. I think this is a market that seemed calm all week, Oliver, and then suddenly got a little less calm and drifted on the downside. Now, these aren't big percentages, as you know. A little bit of worry probably about headline risk in the Russell over a weekend. But all things considered, this move is not scaring anybody too much, although the VIX has livened up a little bit. At least it's gone from negative to positive on the day. I don't know how much else you can take from this price action today, Oliver. Maybe a little fatigue.
Okay. Yeah, I think fatigue is the good way to describe it. Talked yesterday about some signs of weariness creeping in. I would also point out for those that have respect for what the crypto market shows about risk sentiment, which I do. I don't really have respect for the coin, but I got respect for what it says about sentiment. And Bitcoin's dropping off too now, below 27, which is the level I was watching at. So a few of these things on the margin kind of add up a little bit. The VIX waking up a tad. The dollar to me seems like the most compelling one here because it's like, really picking up now. We're trading the highest since March while everybody's trying to tell us that, cuts are definitely coming. That seems like there is some disagreement happening.
Yeah, exactly. The more the data comes out, and I think part of it is also the lack of hawkish moves by the Bank of England this past week.
True.
I thought they underwhelmed the markets with their 0.25% move. So their fight against inflation, they're not fighting as hard as we'd like them to, I think. I think if they went 50 basis points, I don't think you'd see the dollar doing what it's doing right now. But, our data that's not giving the pause scenario much oxygen to breathe is probably why that dollar has firmed up ever so slightly. I think it's firmed up, Oliver, with the percentages of a June rate hike. I think that is what, as at least for the time being, firmed up the U.S. dollar, that and the relationship with the Bank of England.
Okay. I think that was also kind of a sleeper event this week, to your point, because sometimes we do see that where a central bank is a little bit too dovish, actually, and then you start to see yields kind of creep up a bit, and then the dollar here, too, because if they're not going to stamp out inflation by way of crushing demand, then maybe we've got enough demand here to keep inflation elevated. It's confusing. There's a lot of different cross currents right now, but generally we have a market that is still stuck at the same level for 4,200, so I guess we kind of chalk up another week to somewhat of a stalemate.
Yeah, I agree with that too. I mean, there's a heavyweight battle going on, Oliver, and if we're in the early rounds, They're trading punches and no one's the winner so far.
Yeah.
More to come. Retail sales next week. Once we start getting into retail earnings, sure, it's the next level of earnings. It's not the top tier high cap tech, but it's certainly a good look at the U.S. consumer. So that and retail sales will give us a little different picture of the U.S. economy.
No, I appreciate it, Kevin Hanks. Thanks a lot. Good stuff this week. Host of Fast Market. Let's bring in Tim Davis joining us from Davis Executive Wealth Management Group with Steward Partners. Tim, what do you think's happening here? Because to stick with Kevin's fight analogy, big tech is delivering some major bullish haymakers, but you still kind of got this bearish hang-on where the data's imperfect and the S&P can't get through 4,200 week after week. We keep stalling out. Why is that?
Thanks, Oliver. Good to see you again. We think it's primarily due to three factors right now that the market's really paying attention to, and that's whether or not we get this hard landing versus soft landing, inflation, and the Federal Reserve. I think it's pretty safe to say that the Federal Reserve has made it clear that they are on hold, but that hold, we're not sure if the next step is another rate hike, which I believe is off the table at this point, or if we have an extended period of higher rates before lowering rates. As you're well aware, the market is certainly pricing in and hoping for that rate cut by the end of the year. And that's going to be data dependent based on inflation. But to your point about the market being range bound, well, the inflation data has been range bound. The bond market has been range bound. We've been waiting for this event that doesn't seem to be taking place. We're just not getting the clarity that we're looking for, that the market's looking for, and therefore we're just having these days where it's up 100, down 100. We got through earnings season in one piece. The outlook wasn't that great, and buybacks are going to start to decline, not only because probably of softer data, but you're getting a tax now on buybacks as well, although it's very minuscule in the grand scheme of things. And the big elephant in the room is hard landing or soft landing.
The clarity point, in a way, it seemed like a lot of investors were rooting for the regional bank fallout to create a major cascading economic event. And from that, we priced out these Fed cuts, and we actually saw the market rally in the wake of the regional banks. Do you think that we now have kind of disproven some of that thesis, that it was going to send us off an economic cliff? Or should the regional banks still keep us up at night?
I think the regional banks are going to lead to something that's not being widely discussed yet. The banking crisis, if you want to call it that we're currently seeing, is not anything close to what it was in 2008. The underlying assets are money good. We just had a mismatch of assets and liabilities and duration. You had guys that were running the Treasury Department at some banks that were going ultra long duration because they thought the Fed would never raise rates, because that's what they were telling you 2 or 3 years ago. And then all of a sudden, out of nowhere, you go from 0 to 5%, and you've got 10-year duration in your portfolio. The rest is history. So that it's not the solvency issue that I think that people should be focused on. What you should be focused on is what percentage of the total lending market do these banks make up? Because right now they're having a real hard time boosting their loan portfolio. You can only loan against the assets that you have. And if the assets are shrinking and they're losing deposits and they're mostly losing deposits because they're not paying what you can get in, say, an institutional money market fund or other short duration assets. If you're getting 1 to 2% at your bank and you can go buy an institutional money market fund at closer to 5%, that's got nothing to do with you liking your bank or worrying about the solvency. That's got to do with getting a better return on your money. Your CDs are around 5% now. So that's the challenge that these banks have, is their deposit base.
Barbecue at the top of the barber coating.
And that, is leading to lower lending. And you can
If you get a push into end of day.
Banks know that more regulation is also coming down, on them as well. So that's going to cause them to pull back lending. So my concern as it relates to the regional banks is how much are these guys going to be able to lend going forward, and how much is that going to slow down an economy that's already losing momentum?
Well, that's the question, is when do you think we'll know on that, Tim? Because, this is 2 months since SVB. And look, hey, maybe I'm too much of a short-term trader, but I haven't seen credit spreads widen out. We saw that a senior officer loan survey and softening, but nothing really off the path that has generally been going on since the Fed started tightening. Is there a timeline at which we should be able to determine if there is going to be a very noticeable kind of exogenous event because of this, that is something beyond just the natural tightening from the last year and a half of higher rates?
Well, I have some bad news for the instant gratification crowd. That's going to happen. I don't think you're going to get the answer quite that simply. You look back at SNL, part one in the 70s and SNL in the late 80s that a lot of us still remember. And, that is probably more analogous to what we face. You get a massive slowdown in the commercial real estate sector. I think that's pretty much baked into the cake. And the question is will that commercial real estate slowdown, spread, or will it be contained? If it does spread, what does it look like? Here in Boston, you can see it on the streets every day. The Seaport District, which is right behind me, is very vibrant. The foot traffic is up 100% over 2019. You go to the rest of the city, it's pretty quiet. And we spoke to some commercial real estate folks last week, and they said there's basically no pulse in the commercial real estate market. There's nothing going on. Obviously, in Boston, we've got the life sciences and universities, which keep us somewhat buffered from what I think a typical metropolitan area is seeing these days. And this lending thing it's going to take a while to work itself out. It's like when the Fed raises rates, it takes a year for each rate hike to really filter its way through the economy. So we're still feeling the effects of the rate hikes that were made last year at this time. We haven't even felt the full effect of what the Fed has done so far. And I think, that's probably the closest thing that you can get to what, a slowdown in the commercial real estate market vis-a-vis these regional banks struggling. You're not going to see it just pop up in the data. What you are going to see pop up in the data is, the CPI, going up or down, or the ISM manufacturing or ISM services index. That's the unemployment rate. The jobs numbers came out today. There was more filings.
Gotta cut it earlier today, guys.
You can follow that data, and that's going to give you a much more.
What a week! What a fun time! Not gonna have time for video.
Gratification for what you're looking for, but
I will pick up some more. I did pick up some more barbecue shares today. Just because it got filled doesn't mean it's just going to rip up, even though we kind of saw that today. So we'll see what kind of strength there's next week. Could hang out in the range down here, or it could rip up. Gap fill is nice, but I guess I don't quite know if the bottom of this sell-off that happened today is in. Depending on close, I guess we've got 40 minutes. We've got a really strong close, and potentially this was it. Just a dip, gap fill. If it closes flat, not as much. If it's kind of bearish, or kind of closes down here, doesn't look like a double bottom, then yeah, next week could be kind of flat, not necessarily just rip rally. So TA on OTC stocks is a little different, just with the lack of liquidity and the barcoding and the gapping around. But it looks good. You do have kind of this cup and handle right here. 4 hour, you can see it easier. Inverted head and shoulders, like we saw that before, but that's already happened. So that's here. That was kind of that rip up here. And here's this cup and then kind of this handle to the bullish side. Or MACD still bullish on pretty much all the time frames, the longer ones. Could be a little bear flag again here on the hourly. Kind of just like a pennant though, or whatever you call those, little triangle, little wedge. So look to see which way that breaks out, and it breaks to the downside, looking for a double bottom at 14. If it bounces there, and that's another nice spot to buy in. Yeah, I put another line in here for support. Now that we have filled that gap, it's possible we just kind of hold a higher low, maybe this 15 cents, instead of actually coming all the way back down to the 14. Or we could rally from here, really. So gap is filled, which is nice. Momentum is down to the short term, but depending on how we close, will be kind of more the outlook for next week. This thing's totally data dependent, though. It's kind of a guessing game jumping around with TA when it can move so much just on news. But yeah, and market today, nice easy trade. It looks like, looking at it in hindsight. Just a simple sell off, bear flag. Yeah, shorting bounces. So difficult in the moment sometimes. So difficult. On the daily, I think probably gonna get an engulfing candle today on SPY. So I'm thinking next week's probably gonna be gap fill. Pretty early on, probably 407 gap fill, and maybe even breaking these lows down here, these 403 lows, getting to potentially that 400 level. So I'll probably wait till Sunday to open some short futures. We'll see. Maybe open some today. I like to hold them on Sunday, but I just don't have any positions over the weekend. But yeah, that's what I got, guys. I'm gonna have to sign off. Thanks for watching. Thanks for the support. Ace, thanks for the gifted memberships. Thanks for the subscriptions, guys, and all the likes. You guys had a good week. 38 likes, well done. Pretty slow week, but did with some excitement with that gap fill. Love to see it. Still moving up here, see if it catches view up. Thanks, Hugh. Appreciate it, man. Thanks, Mosmis. Happy Mother's Day, I guess. Yeah, that's Sunday. Happy Mother's Day. Give your mom a kiss. Thanks, Jay from the Bay. 39.40. All right. Thanks, guys. Appreciate it. Make sure you jump on our Discord if you're not. It's free to join. It's on the. I have it pinned in the chat. Sub up, like up, comment down. Happy money sticks around. See you on Twitter Spaces. Maybe we'll do a Twitter Spaces this weekend, or just on Discord. But thanks, guys. We'll see you on Discord. Peace out.